from Flagstaff, Arizona, about 7,500 feet. I can't breathe up here. I actually love it. I'm in the mountains. It's cool. It's very cool. A lot of people that are not from Arizona have no idea that there are mountain towns in Arizona where it's, what is it, 80 degrees right now. It's going to be probably 113 down in Phoenix today. So it's nice. All right, let's go, people. So again, I'm Flagstaff, Arizona. I'm actually 10 days away. I'm going back to island life. Okay. I'm just playing some Joe Walsh over there, getting ready once again for island life. So welcome everybody. This is an interesting day. not only not only do we have a discussion coming up, and I think you guys are going to love this discussion for the next approximately hour, 90 minutes. So again, sit down, tune in, turn on. But even after this discussion, we're actually going to have a little bit of Fed talk with Garrett. And I'm actually going to stay on for a bit with Garrett too. So this is going to be a marathon session of Don coming up. The market this morning, it's quiet. I would expect it to be quiet. What's going on? Nothing in the world, right? No geopolitical risk. It's a little unusual to see the rally kind of before the Fed, but things are kind of cooling off maybe a little bit this morning. The volatility kind of holding its own. It's down a little bit, but definitely holding its own. Bonds are kind of massively unchanged this morning, which you would also kind of anticipate that bonds are not exactly going to be rocking until after the Fed. What do you anticipate out of the Fed? Okay. I mean, most of us are like, nothing's coming out of it. But at the exact same time, the market is implying a pretty substantiated move with the Fed today. So you got that going for you. Again, we are going to be with you right until the closing bell. In all the rooms here, we are going to be with you literally right to the closing bell. So whatever you might think, sit down, tune in, turn on, stay tuned the entire time. As I said to you, we're going to be with you here the entire time here this morning. All right, you guys ready to get started? Okay. See, it's interesting. The Fed's nothing. The Fed's nothing. Okay. I agree, but the market right now is actually pricing a move. We'll talk about that one a little bit. But much more pertinent to trade as of late, it's right here. Okay. So this is squeeze bars. And we're going to talk extensively about squeeze bars here for, as I said, the next hour, 90 minutes. Could catching the squeeze surge your account by 50% in 90 days? Again, I am Don Kaufman, to be joined shortly here by none other than Brandon Chapman, CMT. Let's get into it here. This is a risk disclosure. We put this up here because we are no longer financial advisors nor a broker dealer. I'll talk about my background, Brandon's background in the markets here momentarily. Copyright disclaimer. It's mine. It's all mine. Look, if you need to get a hold of myself, okay, or Brandon after today, go to support@theotrade.com. I always like to put that up there. Look, we answer emails here. We want you to be able to contact us, okay, if you have a definitive need. And I answer, okay, those emails. So by all means, okay, email us. If you need us, email us. We're there to help support you, and we answer trade-related questions. Now, let's get down to business. Okay, today, what we're going to be talking about again, squeeze bars. This is Theo approved. And I want to make something very clear because you're going to see this Theo approved come up quite considerably today. The trades that we're going to be discussing today have been traded. Okay, this is not paper trading. This is not back testing. This is not back testing with paper trading on the side. This is traded with real capital. Okay, and the discussion today is going to be some of the trades that we have done specifically, okay, my account, Brandon's account, okay, Theo approved. Also, okay, includes a viable track record. Once again, that's not just a back-tested track record. We are showing you trades, okay, and execution. When I say execution, okay, that means we are actually putting the trades through live into the marketplace. Again, this is not paper trading. And I know that many places, you listen to different broker dealers and so forth. In many places, they're talking about trades. They're like, well, I'm not allowed to trade live. Okay. There's no reason. Okay. Look, I'm no longer in the brokerage side of the business. We trade live over here. Brandon is going to discuss trades done with real money, as am I. Okay, possibly even fire off a couple of positions. Viable track record. And of course, the final and third component over here, it beats the marketplace. And when I say beats the market, let's be specific. Beats the S&P, which I'm going to show you momentarily we have done handedly. So I wanted to throw this up here right off the bat, as you'll see Theo approved coming up quite considerably. And this is, okay, me actually going and doing analysis specifically on some of the trades, which again, I will bring up here throughout the course of today. Couple of housekeeping items here. Okay, housekeeping. Focus, focus, people. We're going to go through a lot here in the next hour to 80, 90 minutes. Shut the door. I still have Skype in there. Skype's gone. Yay. Okay. Close Facebook. Okay. Get rid of Facebook. Definitely get rid of Instagram. It ain't helping you at all. Phones on silent mode. Wait. Let's make sure. Okay. All phones on silent mode. We're good. Okay. Kick out the kids. The dog can stay. You took the time to be here. And I'm going to tell you right now, we're going to move at a pretty good clip. We have a lot to go over today. So focus on actually being here, being present. Before I go too deep into this, I'm going to give you guys the nickel tour on me. Okay. And of course on Brandon Chapman here momentarily, but for those of you that are kind of brand new, I love, where do they find these pictures? For those of you that are a little bit newer, have no idea what a Theo trade or a Don Kaufman happens to be. So I'll give you again, as I said, like that nickel tour. Okay, I grew up in this business, and I always say, like, everybody always has a story how they got involved in markets or how got involved in trading or ended up at a floor in Chicago. I don't have a great story. Like, I literally grew up in, okay, and around traders. I mean, I remember from like being a young kid, like going to Thanksgiving dinner, and they'd be like, "Oh yeah, man, I was so deep in the money, and on those spoos," and that's how I grew up. And I grew up with it. And when I was 22 years old and 3 weeks out of college, I got a phone call, and that phone call is, I ended up 3 weeks out of college on a trading floor, just clerking. 3 weeks after that, somebody didn't show up for time on work. They put me in a trading jacket, and they said, "Have at it." A short time after being on the floor, it's about 18 months after being in Chicago, I got approached. Literally, I was on an escalator coming up from the Chicago Board Options Exchange. I'm on an escalator, and a guy that I knew from the pit said, "Hey, we're leaving the pit. We're starting a firm. The firm's called Thinkorswim. I have no idea what it's going to be yet, but you're a young guy. Come with us." Okay, I was not even 24. I wasn't even 24 years old yet. And they said, "Hey, come with us to this startup Thinkorswim thing." And okay, let's do this. So I was with Thinkorswim from almost the very beginning. Helped build a lot of the technology there initially. Then I went on the road and actually ran education for Thinkorswim. I was in the executive team when we took the company public in 2007. I was there when we were bought by TD Ameritrade in 2009. And at one point had 768 individuals kind of reporting through my Series 24. If you have no idea what that is, it's your broker dealer license. Anyway, in my time, both at Thinkorswim and TD Ameritrade, okay, I built and ran education for, at that time, was 7 million clients. And more importantly, I got to see all their order flow. And people have no idea what watching order flow happens to be, okay? I had access to everything that you did. Like, literally, I could pull up your account, like, "Oh, what was Mike doing on this day?" But that's not the way we looked at order flow. We looked at order flow in terms of huge subsets of data. I would look at 200,000 accounts and said, if you did a covered call, would you make money, on the covered call? Do you trade iron condors? So when we speak from a position today of having seen your order flow for the better part of 15 years. And even before that, I was on the trading floor and saw your order flow. So again, what you learn specifically today, because today is about squeeze bars and you're going to learn a lot about this, but you're going to hear me use the terminology order flow a lot today. And where that comes from is watching billions of others' mistakes and the knowledge of what works best specifically, okay, for retail traders. So let's get into it here. Let's start to kind of bridge the way. I wanted to give you, again, that brief kind of nickel tour on myself over here. The market, okay? The market leaves clues. When we start talking about like order flow, okay, I call it order flow. but the market really leaves clues. The definitive question is, can you see them? Okay. Like people watch this all the time. Have you ever watched a stock? It sets up perfectly. You're looking at the chart. It's going to break out to the upside only to see it collapse, literally like the moment you got it. Like it was like you were the high tick. You bought Microsoft just to see it go down. And there were clues prior to your entry. Did you see them? Okay. Why does the market then sometimes look really weak and then just explode higher? Okay. Leaving traders completely scrambling. Okay. We're going to start to bridge this. Okay. As I said, the market leaves clues. That's what order flow is about. And we're going to get into, okay, the context of how to cut through, okay, all the crap that you see. Okay. Cut through the chaos, spot signals that drive moves. Okay. How would your trading change if you could see these footprints that institutional traders, okay, they leave before the market, okay, reacts, right? And there absolutely are kind of institutional footprints. And that's exactly why, okay, we are going to get into this with none other than Brandon Chapman. And Brandon's about to show you, okay, how he has gone 19 for 19 over the past 75 days. 19 for 19 over the past 75 days, okay, by spotting what is the majority of what most traders miss, okay? And that is, in fact, okay, what we term the squeeze bar, okay? Each time you're going to see traders thought was happening, and we're going to take you through a number of examples. And these examples, these are trades, okay? You're going to actually look and see what traders thought was happening, okay? And then two squeeze bars in progress and what's actually happening right now. And again, I want to stress this to you. We are going to show you, okay, a couple of these squeeze bars in progress, two of them that are in progress right now, okay? And I don't want to put the cart before the horse over here and give you some of the underlyings, but we're going to explain the context of it, okay? And then some trade setups right now. So Brandon will show you what actually happened, okay? And how Brandon, he kind of looks deep into what that real move happens to be. And simply put, you're just never going to look at price action quite the same way. That's the goal today is for you, okay, to have a very different angle on how you view price action in the marketplace, cutting through, okay, what is noise and getting to the bottom line of what that squeeze bar is. Again, I like to use the terminology order flow. We'll explain that as we go along, okay? This 50% account surge, okay? 50% account surge. Now, we're giving you specific dates in here. Why? Okay, because this is real. All right, this is an updated performance. This is the past 75 days. Okay, Brandon's actually seen a 52.6%, okay, increase in the past 75 days. And I'm going to let Brandon speak to this here in just a moment. But again, we are looking right now in the past 75 days, 52.6%. Now, ladies and gentlemen, let's bring on the kind of the man of the hour. Brandon's actually going to take us through examples. I'm definitely going to be heavily involved in some of these and reading through some of the order flow. But as I get into it over here, okay, I want to talk a little bit about Brandon. So to begin with, Brandon's a chartered market technician, which is a very difficult designation to receive. Moreover, Brandon, I know, has actually written questions for the CMT test. If anybody's ever taken this test, it's brutal. Okay, multiple parts over here. It's absolutely brutal. So Brandon was actually invited by the Chartered Market Technician, okay, group to write questions for future tests on here. So it just speaks to his depth, his knowledge, and his apparently his ability to score really high on the test. So Brandon, how I actually know Brandon is Brandon actually worked with us way back in the day from Thinkorswim into TD Ameritrade. Okay. And Brandon was one of the top educators and contributors, obviously, to both Thinkorswim and TD Ameritrade, and trained thousands, okay, of retail traders, okay, featured in Forbes, Investopedia, 20 years plus market strategy and experience, okay. And again, Brandon, I want to just bring you into the conversation right here. Anything else you want to say on the CMT designation of how brutal that test happens to be, or you just want to get into it right now?
Well, I try to make it brutal. I mean, we don't want people just to pass it easily, you know. So So every 6 months we write level 3 questions and try to make it fair but difficult, you know.
By the way, I love there was a comment in the chat. It was like, it was a certified massage therapist. It could have been. It
It
could have
could have
been.
been, right?
But the number of like CMTs out there is extremely limited. Most big, firms only have a handful of CMTs.
Mhm.
Here at Theo Trade, what do we have? Four CMTs, I believe, which is pretty shocking. So, Brandon, I want to kind of turn it over to you. Let's get into it. Let's talk a little bit about some of the squeeze bars,
All
and
right.
I'll interject as needed in here on an as needed basis. But
That's right.
this
Don's
is
ready to
what's
pounce.
this is what's near and
Watching,
dear to my
judging.
heart. Yeah, this is it. Watching, judging, but this is near and dear to my heart because it's
Yeah.
all about order flow, and order flow is really what drives these markets. Brandon, have at it.
All right, let's do it. I'm going to kick something off with like a relatively painful. All these are recent examples in the last 2 months. And for this one, we're going to kick things off with ARK Innovation. Stock declined 34%, leading into that kind of March 31st, that level there that I'm pointing out on the chart. As we look at this, I mean, what were you thinking? Let's go back, a couple of months here and say, what were you thinking? If we're to pull 1,000 traders at that point in time, what were your thoughts at that moment? The way that I look at this is that a 34% decline, most retail traders were piling into puts. Many probably on the institutional side as well. We were in free fall. But I'm going to share with you kind of what I saw at that point in time. This was ARK. This was a 5,000 contract trade that came in. They bought the 17 April 25, the 48 calls. So amidst all of this chaos, amidst all of the negativity, amidst everything that they're talking about the market, this came through. And if you were to pull 1,000 traders, what were you thinking? You could probably imagine the bearish expectation that they had. But we looked at this differently. We saw the blue bar as represented by the volume that's traded that day, and it told me everything was not as it seemed. And something very different was just about to happen. And so what you'll notice here after a couple of down days, the price began to surge and ARK Innovation was up 70% in 70 days. What did we do? Well, while many got crushed, we actually took a trade, and this is one of the trades we took was for a 58% gain. And if you didn't see this signal, we're trading blind, right? We saw what few others did at that point in time. And there was a largely untracked liquidity shift that was happening just beneath the surface. And as you can see, we turned it into money in a very short period of time.
By the way, this is the first place I'm actually going to interject, and
All
I want
right, let's do
everybody
it.
to I want everybody to understand what you're actually looking at here are trade executions. The trade executions, these are copied and pasted specifically from Tasty Trade. So we trade between Tasty Trade, Thinkorswim, which is obviously a Charles Schwab product, but those are actual executions from Tasty Trade, and that's one of the most important things when I talk about like Theo approved. It's these are live trade executions,
Yeah.
and it's important that you guys that see everything in there. You even use a GTC order. I like it, man. So I can see everything inside of his trade execution. So these are, talk is cheap, and I'm so serious about that because I'm adamant. Talk is cheap. Okay, if
Yeah.
you're not willing to execute upon something, and in this case, upon that squeeze bar, okay, then it's all for nothing, and it's all talk. But this one right here is a pretty definitive trade execution. That's exactly what you're going to continue to see here throughout the course of today's presentation.
Absolutely. And again, this is this management of knowing what to trade, how to trade it, how to control it, all this stuff is kind of packed. You'll see these results as we go through. But here's another one here. I mean, again, this is Mara Holdings. The stock declined 68% from its high. And again, you think about it, right? We're right at the start of April. We're at the throes of all of the selling in the market. And you think about if we pulled 1,000 traders, what would they think at that point in time? Most traders are probably bearish or they're just pulling back, wondering what just happened. It took them a while to transition to get bearish, and then you start to get bearish, and then you start to get reticent to do anything. Foreseeing the future, looking into the crystal ball, what do you think the response would be? The issue is that they don't see what's unseen, right? And I'm going to show you that there are unseen factors that are going to shake up the market, and you're going to start to be able to see them too. And once you see this stuff, you can't unsee it, right? You're going to want to see it every time. In this case, we saw 4,000 contracts. This is on HUT on 411.25. There was multiple of these across the periphery, and I decided to trade Mara as part of that. But they bought the 20 June 25 17 calls. Again, what we're doing is this is not something that people are looking at. I saw the blue bar. My eyes popped out of my head because everything was not as it seemed at that point in time. What happened in Mara subsequently, a 76% increase in 34 days. That's a phenomenal move, right? And again, we're seeing this stuff. We're stepping in. We're buying in this case when others are selling and profiting for it. In this case, a 74% gain in Mara Holdings. Okay. And so again, this everything drives back to what we're seeing behind the scenes, the pressure that's building, and then we're taking that pressure and trading it to create opportunity. And so why does this blue bar keep leading me to money? Okay. What do I call it? I call it a squeeze bar. And so that's kind of the subject or the title of our presentation today. But what I'm going to tell you is this is a game changer. And what you're about to learn is going to change how you're going to look at the market forever. You're never going to look at price the same again. And once you see it, you'll never be able to unsee it. So what is the squeeze bar? A squeeze bar, frankly, is just a rare chart pattern that signals pressure is building before the breakout. It's the calm before the eruption in the price, and the bar signals there's a squeeze. Now, Don is a former market maker. I mean, let's talk about the squeeze. I know you know the power of the types of plays, and finding them before they move is such an advantage. But what do you see out there in terms of what we're talking about in terms of the big bars and the squeeze?
Yeah, you know what? So the term squeeze is so overemphasized, overused, if you will, in this business because there's so many different types of squeezes. But I'm actually going to get really, really specific over here. So how many tuned in right now are familiar with what we term a short squeeze? Anybody here familiar with a short squeeze? You can just say me, or no, and it's okay because people think of like short squeezes all the time. And what a short squeeze amounts to, and I'm going to take you to a little bit to a trading platform over here. What a short squeeze amounts to is that the marketplace, for instance, keeps running up. And what it forces is people that had sold the stock to open have to buy to close, and they're buying to close, and they're buying to close. And that's the kind of squeeze that most people are familiar with. And I'm going to write it up over here too. I'm going to use NVIDIA. And I'm using NVIDIA not because it's the end all be all, but I'm using NVIDIA in this case because I think everybody knows it. Everybody's warm and fuzzy about it. Okay. But if I showed you a short squeeze, okay, imagine that I sell stock here. And this is an intraday chart. So let's get crazy. Let's even open up a daily chart. Let's open up a daily chart. Okay. Would you argue that, maybe you could have shorted it here, but let's say that you are short, which means you sold to open. You sold stock right in this neighborhood. As the stock runs higher, what's happening? Okay. You're losing money. And all of a sudden you have to buy, and it forces the stock up. People, that is not what we're talking about today. It's not what we're talking about today, okay? I'm actually going to show you, okay, in context, what really happens in the midst of what we often term a gamma squeeze. Now, how many people have heard the term gamma squeeze? Because I do not want this to be confused with a short squeeze. A short squeeze just forces people that are short, but it's wildly misinterpreted as to what, these squeezes are. I'm going to use NVIDIA again as an example. Why? It's just kind of marquee, okay? And I'm going to explain it from the context of having been a market maker. So not only have I been a market maker, but I was also on the brokerage side. And on the brokerage side of the business, we had firms that took the order flow for our clients, and you get to see this thing kind of firsthand. So if you really want to know what goes on in order flow, you pay attention right now. You ready? Okay, because here we go. What you actually have very often right now are retail traders. We're going to tag retail with an R, okay? And that retail trader goes out, and what do? They buy calls, okay? Have you ever bought calls? Anybody in here? Has anybody here ever bought calls? We're going to keep this a very interactive session today. You ever bought calls? Retail buys calls. Anybody? Okay, who's buying calls? Somebody in here has inevitably bought calls. Now, when you buy calls, Okay. Of course, people have done it. All right. When you buy calls, the which is what we term a market maker, okay, sells those calls to you. They sell the calls to you. Doesn't matter which calls. Okay. Does not matter. There's a bid and an offer. If the market's $1.15, you pay $1.15. Okay. They sell them for $1.15. But when you buy calls, are you bullish? Okay. Are you bullish when you buy calls? You go, yes, I am. Why are you bullish? I don't even care. It doesn't matter. Because you're buying calls, did you know you're actually forcing, okay, the market to go where? Higher. You're buying calls, the market maker selling calls. The moment the market makers sell calls, and I literally mean, okay, they sell calls and they buy stock at the exact same time. Okay. They sell calls and they, okay, buy stock at the exact same time. Why? They don't want to take directional risk. You are bullish. They're net neutral. They're net neutral. Why? That's supposed to be a zero over there. They're net neutral. They're not trying to make money, okay, from a directional move. That market making business is not about a directional move. The market making business is about bid offer spread. Okay. It's about doing millions and millions of trades and basically churning 5 cents and trying to do that a million times a day. And what do you get? You get a guy that lives in Florida, okay, called Ken Griffin that runs Citadel. That's what it is. But if you buy calls, you're forcing them to buy stock. And when you buy stock, what does the stock do? The market actually goes up. And then somebody else comes in there and does what? They buy calls too. They buy calls, which forces this market making firm to do what? Sell more calls and buy more stock. And you get stuck, okay, in what is a feedback loop, okay? And what those feedback loops look like are stocks appreciating higher, okay? Being able to spot them, well, that's a little bit more difficult. I can see that the number of calls trading NVIDIA today, sky high, traded at the ask or above. I know that they're buying them. Okay, I know they're buying them. But I wanted to give you just insight before we go any further, just scraping on the surface here. I wanted to give you insight to exactly what Brandon is talking about. And when Brandon's talking about a squeeze, okay, I don't want you to think this is a short squeeze or, like a Bollinger Band squeeze, or this squeeze or, the Fibonacci squeeze. Like there's so many different types of squeezes. Brandon, I think it's important to understand that these moves, okay,
Yeah.
are designated by options order flow. And
I
to
mean,
that, let's get into it.
You're
Let's keep
creating a
going.
mechanism for the price to move in a direction. And Don, imagine if you're a market maker and you see all of a sudden you've got 30,000 contracts traded in one trade, right? You've got 100,000 contracts traded in one trade. I mean, this is the size sometimes we see. And so the bar signals that there is the potential for a massive squeeze in the price. And this is mechanically driven, as Don just explained. And so let me show you another squeeze here. Now, this one, again, pretty recent. This is SILJ. Now, you'll notice the chart setup's a little bit different. This is a breakout. Breakout occurred. Now, if you've been trading silver or silver stocks, especially silver stocks, it's been a bit of a disappointment. You get the move, and then all of a sudden, there's a sharp sell-off. This was a breakout, right? SILJ, these are the silver junior miners breaking out above resistance. And so, again, the idea is, are you willing to take a big breakout? I know many of you are thinking, oh, it's moved too far. I got to sit back. I'm going to wait for a retest. I'm going to place all of these qualifications as to why I'm not willing to take the trade today. Well, guess what? On that exact day, we saw 2,000 contracts in one print come through. The 27 June, 16 calls. So now all of a sudden we get a move in the stock price and we see the interest coming in and the expectation that the price was then going to move further. So how did I know that the breakout was going to explode higher? Again, I go right back to this blue bar here. What you see right here, and again, we're going to go a little deeper into that, but this indicated there was a potentially big opportunity. And so we just talked about the idea of a gamma squeeze created by these big blue bars. But again, other unseen forces telling me it's time to get in. I mean, if you guys know the story behind silver, oh, the shorts are at this price. They're trying to keep it below 31 on SLV. They're trying to keep it below 33 on SI. On the futures, But again, what we marked here, we saw big time call buying coming into the product. Many of these stocks have higher short interest. Now, again, we talked about the gamma squeeze, that Don just went over, but guess what? All this means is that people had piled into these stocks, selling them, selling the shares, and at some point they've got to buy them back. This is TNT that we're piling into a warehouse. All we need is a match to keep this thing moving and even exploding more quickly. And so we get this gamma squeeze, we pressure the shorts, and all of a sudden the stock explodes. We see this time and time again. And what we saw from that point was a 10% advance in 3 days. Now, what I did to be able to take advantage of this opportunity, again, those that question the breakout, they're stunned. Shorts are getting wiped out. What we did is we took this into a 393% gain in 4 days. And again, this is how you take advantage of as the pressure builds and you get these signals, you see the blue bar, we take the steps, we look for the opportunities to trade them. Now, sometimes the price isn't in a big breakout mode. We're just kind of
I was in
grinding
that
it
previous
out.
one. I should
Go
throw
ahead.
this out. I was in the previous one. I took it in a different ETF, but
Uh-huh.
I definitely took your lead on that one for sure. So there's a few trades here that Brandon's actually showing, and I'm like, some of you that have been around Theo Trade for a while, you'll notice that some of the trades that I've done kind of mirror exactly what Brandon was doing. A couple of trades. In the case of silver, I traded the ETF in here, but yeah, I actually took your lead on that one
Yeah.
and went after it. So that was winner winner chicken dinner. Onward.
Yeah. And that's the thing is that, I mean, how do you adapt in the market? How do you find new opportunities? This is the great thing. We're always identifying where the money's going. We see the blue bar, volume. Yes. Here's IYR doing nothing. Again, we ask 1,000 traders, what do you think about this? Is this a buy? Is it a sell? And you're like, I have no idea. There's no trend here, right? I'm a technician. A lot of you look at charts. This is what we're seeing. IYR traded in a 2.5% range for 13 days. Nothing's going on. Market's not expecting anything to happen, but this is what we saw. This is on the 31st again. Same day we saw ARC. Same day we saw bearish trade. 10,000 contracts traded, bought the 17 April 25 93 puts. So this isn't just wanting everything to go up. We took one up and one down, right? In this case, IYR, we saw that big blue bar. We're expecting a gamma squeeze to the downside in IYR. That's exactly what happened. We saw a 15% decline in 9 days on IYR. It's real estate. It lagged and drove hard right into the lows. And in this case, we got a 72% gain in 5 days trading IYR. Another example. Again, we're looking at these bars and we're deriving direction, targets, time frame, all of this stuff coming together. In this case, we got SLV. Don mentioned he traded SLV. Well, 15% increase. Did you miss the move? Is it done? The answer is no. Okay. So we pull 1,000 traders. We're wondering, okay, we're trying to interpret one candle to the next candle. We're trying to make guesses. Is the trend going to continue? Is it about to reverse? We're not worried about all those questions just brewing about in your head. In this case, what we saw on April 28th in SLV, 40,000 contracts. That's huge size buying the 18 July 35 calls. Don, if you see a 40,000 contract call order coming across your plate as a market maker, I mean, what are you thinking at that point?
Yeah, this one was huge. This one was actually blaring out us. All of us actually saw this size in here, and it's really interesting not only to see what your trade is about to be in here and so forth, but see the most interesting thing about this is this thing is still running. This thing is still running right now too. Like this is a trade this is a happening trade. Like think about that size though, 40,000 contracts. Okay. 40,000 contracts doesn't matter what somebody knows. I mean, basically it's not about what somebody knows. It's not about, anything other than can you cut through the order flow? Okay. And people want to just track like options activity. This is not about just tracking options activity. Okay. There's definitive reasoning for this trade actually going through. Okay. And it is going to drive that order flow. And that's what's so critical to understand is, people look at technicals and so forth for self-fulfilling prophecies. This is not a self-fulfilling prophecy. Okay. This is actual skin in the game trade. Okay. And Brandon going through and deciphering, okay, where it is, what it is, and then more, appropriately, how to actually execute upon it. And that's, Brandon, that's the whole like critical
Yeah.
aspect of this is like looking at the trade is one thing. I see big options volume. There could be big
Right.
options volume just from a dividend. There could be big options volume for 20 different
Yeah.
reasons. This this is somebody positioning. This
Yeah.
is positioning. That's
There's
what's
a
important.
lot of noise in this
Right.
space. How do you cut through the noise and find the opportunities, right? In this case with SLV, we saw a 13% increase, right? We had a specific way to trade it and it turned it into 100% gain in this case, trading a spread. But the idea is that how do you cut through the price action? And sometimes, again, it's gonna go contrary to what you're thinking. Sometimes you're questioning yourself, and all of a sudden, we're looking through, we're cutting through, we're finding the opportunity, we're finding the calm in all of the chaos, and finding ways to trade it. In this case, this is one that's in the midst of the chaos. We're going back to April. We had a big sell off. We saw the opportunity in going bullish ARC. We saw the opportunity to go bearish in KRE. And this is, sorry, in IYR real estate. And then all of a sudden we get a rebound leading into the 9th of April. KRE is up 13.5%. This is your regional banks up 13.5% in 3 days. What are you thinking here? Are you anticipating if we pull 1,000 traders? What's your thought process here? We had a major sell-off. We just went up 13.5% in 3 days. Are you getting long at this point? Or are you stepping in going short, meaning you're bearish? Or are you just sitting back and saying, you know what? I just don't know what to do. We're talking about trying to cut through the chaos and find the calm, right? And be able to see things that other people aren't seeing, that 99% of traders aren't looking at. And what we saw on that day, and you'll see right here on April 9th, 2025, there were 5,000 contracts bought of the 16 May 25 $40 puts. If you buy a put, guess what? You're bearish. And again, what are people thinking at that point? A lot of people are in panic mode, right? And the thing is, we've just got to get beyond and get through the chaos, find the calm in our trading, and make measured and take calculated risk. In this case, in 2 days, KRE declined 10%, and we turned that into a 47% winner in 2 days. Finding the calm through the chaos, right? Being able to see stuff that most people aren't even aware of that can really add to your directional expectations.
Yeah, I love actually this particular example in KRE. This is one that's pretty much near and dear to my heart. I trade KRE, which is of course regional bank ETF, pretty consistently out there. And Brandon actually turned me on to the puts that we're actually trading in here. And the first thing I said to Brandon on this when I go, how do I know, man? It could be a hedge. You know what he said to me? Meaning that somebody could just be buying stock and then hedging by buying puts. And he said to me, he goes, they traded enough puts that it wouldn't matter if it's a hedge or not. Okay,
Yeah.
the puts they're trading is enough to actually drive the order flow. People are looking for like confirmation in the technicals and so forth. The order flow, okay, is defining what the price action is going to look like.
Yeah.
That's what people miss about this business is the options marketplace is now a cart leading the horse. Can't stress that enough. And that's what squeeze bars, effectively become is this cart literally leading the horse. Brennan?
Yeah. I mean, there's an axiom in technical analysis that says that volume precedes price. And when you see volume, in this case, we're looking at big time option trades, squeezing the price, sometimes squeezing it up, and you get that gamma squeeze to a short squeeze. And other times it's driving it down just by the sheer weight of the activity, creating that confirmation. Here's another one. This is Plug Power. I know many of you probably had traded some of these stocks, these green energy companies, and this stock declined 78% from its peak. We're wallowing down here by mid-April. The market's starting to recover. This stock's not. And again, we just go back to, you pull 1,000 traders. What are you thinking? You're probably not touching it. And the reason why I'm excited to show you this is that in the midst of the price crashing, you've seen all the bearish movement this year, and all of a sudden you can see through the chaos to the calm, right? You get antsy during the selling. We're trying to be able to calm that down and find the opportunity here. And what we saw was, in this case, 15,000 contracts on plug on April 22nd. They bought the 19 December $1 calls. What we saw from that point forward, we got a quick pop and a decline, and then it really began to run. We get the squeeze bar, the gamma's pumping. I'm not showing you all the other stuff that went on here at the end of May that precluded this big run up here. But we're seeing the pressure build, and then it pops. And that's exactly what we're trying to do in these contexts, in this case, for a 222% gain in plug power.
By the way, this one was wild. This one was totally wild. This is one that we also talked about, and I was like, "Oh man, this thing is crashing! It's crashing! Right. Some crazy person's buying 15,000 out of the money calls." And here's one where I actually sat and watched this one. I got to tell you, I wasn't the trader on this one. Brandon was absolutely the trader in this one, and I watched it go up, and I'm like, "Oh man!" I mean, crazy move though. But 15,000 calls, and I'm playing like Monday morning quarterback. I'm looking back at this one, and I'm like, I could have been somebody, because we saw this one clear as day. I mean, this one was absolutely clear as day. And, there's not too many trades that I actually will say to you, Brandon, like, that's the one that got away. But this is one where it's down almost 80%. Like nobody even thought that, buying calls would be like a reasonable like thing to do at a period of time like that. And the stock popped absolutely huge. I mean, this to me is one of the most pivotal of trades that you've done, because even I was intimidated from the sell side activity inside of plug prior to the 106% pop to the upside.
Yeah, and we got to talk about these kind of some of these trades in the context. And you look at the expected move, and you can find a statistical edge in this, right? And that's what we're trying to do. Now, you miss the opportunity. Well, guess what? I got to forward here. We're going to talk about a squeeze bar that's currently in progress right now. Actually, I'm going to show you two of them. This one's in Rocket Companies. We're talking squeeze bar. What an appropriate name, Rocket. But this is one that, again, we got the breakout. Are you willing to step in, look through the chaos, find the calm in this? We're pulling back, we're retesting, and actually today we're starting to see a squeeze, and we'll see, can it continue? Right? If it does, boom, we're Johnny on the spot. We're going to close this out. But what we saw in this was in Rocket, 10,000 contracts traded on 6/12. They bought the 15 August 16 calls. Okay. And again, this is a mechanical thing, right? We start to go through two, and through that level, we see that continued pressure on the market maker. We see continued pressure on the shorts. And that's what creates these statistical anomalies that aren't so anomalous. This stuff happens all the time. You just need to know how to uncover it. Another one here that's in progress right now is SoFi Technologies, SOFI. Breakout, we've experiencing the retest. It's starting to surge today a little bit. But again, what are we seeing? What did we see that drove us to this one? Same day, 6/12/25, 138,000 contract size. We had 60,000 contracts early in the day. They're buying a very short dated 27 June 25. They're buying those 16 calls. And again, when you see that kind of activity, it just shakes you like, oh my goodness, what am I about to do with this, right? How am I going to use this? Well, we're going to show you how to do that. But again, this is looking calm through the chaos.
That last one too is another it's another one that's right on the verge of it. The activity is there. Look, some of the price action kind of speaks for itself. Look, squeeze bars, okay? Squeeze bars are just the beginning. Squeeze bars are one type of what we term ghost prints. Okay, squeeze bars are one of the most critical areas, though, of this, leading effectively to what we, obviously have termed a gamma squeeze. It's relatively rare, and what Brandon is actually doing is sifting through, okay, hundreds of different examples. Look, there's a lot of reasons that people might buy massive amounts of calls and massive amounts of puts, and it's actually sifting through that particular data, okay, that gives the most viable opportunities over here. Those footprints, though, left behind by these like unforeseen forces that truly move the market, you got to look through those. It's like a sand sifter. You literally got to look through them. Okay. We use ghost prints to spot where the pressure's building. And that's one of the biggest aspects of it. Like, again, I might call it a gamma squeeze. It just comes down to where's there pressure in the marketplace? Where is it building? Okay. Before the crowd sees it, anybody can see a 5,000 lot trade. Anybody can see a 5,000 lot of calls trade. Anybody can see a 15,000 lot of calls trade. But does it meet the specific criteria? Okay, squeeze bars show that pressure. And this is a compilation of factors that are actually coming together. Other ghost prints reveal the hidden hands behind the move. Okay, and again, I want to make this kind of clear in here because I'm a quantitative trader. Okay, and this isn't technical analysis. It's kind of ironic because Brandon is most heavily known probably for technical analysis. Okay, but this is like forensics of trading. That's really what it comes down to. It's forensics of trading, and it is looking. And again, I'm a quantitative trader, okay, and this is looking quantitatively, if you will, okay, at markets. Okay, when I say it's forensics of trading, it's sifting through all of this data to come into a summation of price action is going to be here. Ghost prints reveal breakouts, okay, that fake traders out. Huge breakouts like the silver one. I was totally on top of that one. Actually, Brandon just gave me one recently, which was in the XLE, the energy sector. Okay. It actually would have been 20 for 20, Brandon, because we did hit that one. Sell-offs that trap short sellers. Okay. Explosive, okay, moves that seem to come literally out of nowhere. Okay. We've seen it over and over again in today's data over here. Obviously, Brandon only taking you through a handful of some of the trades that we've actually had on, okay? But what we're here to do, okay, is ghost prints, positions you behind the scenes with full VIP market optics. And that's really what, Brandon's trying to do is take you into some of the market optics over there. Why do traders keep getting kind of head faked? Right. And again, I look at this very different. I call it order flow and I call it, a gamma squeeze. But most, traders, what are they relying on? Indicators that lag behind price. Every indicator, okay, is driving 100 miles an hour looking through the rear view mirror. That's what indicators are. News, please. By the time you ever able to interpret news, it's already been traded. Okay, the market making firms and so forth, proprietary trading firms are trading news right now, okay, in literally billions of a second. They measure things today in billions of a second. Gut feelings, okay, since when have we had like a good gut feeling on the marketplace? That's probably not a great way, but ghost prints, it doesn't follow the herd, okay? It follows the forensics. It follows the forces, okay, that are actually moving markets. And when I talk about that, what moves markets and the forensics of moving markets, okay, I often call it like that cart leading the horse. It's the options marketplace that's kind of dictating, okay, future order flow. What if you could see the truth before everyone else, okay? Imagine knowing when a breakout's real, okay, and when it's a trap. Is there actually some definitive options volume behind that? Okay, when a sell-off is panic selling or the start of a deeper drop. Okay, when a squeeze is actually building. And again, we're not talking about, your Bollinger Band squeeze or, some crazy Keltner channel out there. Okay, we are talking about literally this huge amount of gamma that's just building and building. I always think of, whenever I think of like gamma squeezes, I think of the Death Star because literally it's moving and all of a sudden it explodes. And again, these moves have been fierce, okay? And this is only in the last few years. Like a lot of these footprints, they were not nearly as effective. Retail is driving that order flow in a big, big way, okay? When a squeeze is building before it explodes is critical data. That's the goal of ghost prints, okay? Every single day is to identify, okay, where that pressure is. Ghost prints, okay, the edge, okay, you need in this marketplace. So this is a really powerful system, obviously, that uncovers, okay, these market signals in real time, right? And again, it's sifting through a tremendous amount of data, okay, for Brandon to come to the summation, okay, of what eventually becomes a trade execution. This is trade alerts based on institutional positioning. So in the end, you sift through all of this data. And again, I always think of like a sand sifter, sift through all this data. What are you left with? okay, maybe 2 or 3 products that really may have, okay, a squeeze that is built on them. Okay, that translates into trade execution. Here, trade alerts. Okay, trade alerts, and that's based on institutional positioning. So we sift through all of the data built for regular traders who want to stop guessing and start seeing the truth. Introducing Ghost Prints, the 90-day challenge. Now, your mission, okay, is 50% account surge in 90 days. As we just alluded to a little bit earlier, and I'm going to allude to again, it's got 52.6% in the last 75 days. This is led by Brandon Chapman. Obviously, weekly trade breakdowns and guidance using Ghost Print signals. Master the hidden clues, okay, that signal explosive market moves. Again, this is Theo approved. All of these Ghost Prints, okay, are traded with real money. There is a viable track record, much of which we're more than happy not only to share, we just shared many of the trades that we just did, and it beats the market. Beating the market is beating the S&P 500. Look, here's what you get with Ghost Prints and the 90-day challenge, okay? Number one, okay, and again, small prints, follow along with me, 2 to 3 high probability trade alerts, okay, per week. I want to clarify, it's 2 to 3 trade alerts per week. It's $2,000 value. Okay, those are hand selected, okay, by, of course, Brandon Chapman. Ghost Prints, custom toss scanner. It's another $500 value. Now, if you're not on Thinkorswim, okay, you'll still be able to discuss scans, okay, and the results of those scans. Why? Because what we're going to talk about is there's an exclusive member community. There's a chat room specifically for, okay, Ghost Prints where we can actually post the results of those scans. Included in this is also going to be a 2-hour live masterclass on Ghost Prints. We are re-hosting with Brandon live Tuesday, June 24th. Is it soon enough for you? Absolutely. Okay. Look at your calendar right now. Look, that session, it's a 2-hour session. It will be recorded, but it is going to be Tuesday, June 24th at 3 p.m. Eastern time. The session, again, will last 2.5 hours over here. It's another $1,000 value. Brandon wanted to host, okay, again, a live Ghost Prints. It's taking you through all the nuances, okay, and all the criteria behind what makes, okay, a viable print and what doesn't. What that basically breaks down to is when you're looking at a big print, like, oh, somebody traded 15,000 calls, could be a dividend, which is a non-event. Could be that it's a non-event. Like we have to actually break down, okay, what is an event, what is a real print, and what is not. And that's exactly what he's going to do in the 2-hour live masterclass. Okay, you're going to love this. There's also a 12-week mastermind. Learn and trade alongside, of course, Brandon. It's another $2,500 value. Okay, and then we have Ghost Chat. What Ghost Chat is, it's a member community, exactly like the community you're in right now, okay, but exclusively for Ghost Prints. The total retail value is close to $7,000, okay? Today is $995. Now, I want to take you over to a page briefly here before we go any further. I want to take you over a page so that everybody's kind of clear, okay, on one specific aspect, okay? If you guys hop onto the page, it's theotrade.com/ghost. Theotrade.com/ghost. Okay. They're posting that link in there. One of the reasons I want to bring you into scope on this, okay, is something that we have never done before towards the bottom of this screen. And I want to make sure that this is distinct and very, very clear to everybody. Okay. We are offering Ghost Prints, okay, 90 days for $995. So you can actually join the Ghost Prints 90-day trader challenge, okay, for $995. Or you can elect to do an entire year, okay, for $1995. Obviously, the $1995 is a considerable discount, okay? Both of those, and again, both of those will qualify, okay, for what is a 30-day money-back guarantee. And I will talk about that in much more depth. Okay, so regardless if you want to sign up, okay, for the 90-day trader challenge, okay, or you'd like to sign up annual at $2,000, Clearly, this is a very dramatic discount because if you for 90 days and have to do that basically 4 times throughout the course, right? It's quarterly. Okay. You're looking at $4,000. It's literally okay, half off to do the annual for 1995. All right, back to it over here. So again, we're posting the link inside of the room right now. Kind of breaking this down a little bit. 2 to 3 high probability trade alerts per week. Brandon, I want to bring it back on and actually get you involved a little bit, specifically on these over here. Okay, stock and option trade alerts. Okay, Brandon, if I asked you what's the number of stock alerts versus option alerts, it's like I haven't seen you trade that much stock. Okay, is there anything like specifically that makes you trade stock over the options?
Yeah. So here's the thing, and you've commented on this quite a bit, right? There's just been a lot of risk in the market. How do we perceive risk? It's in volatility. So we haven't done as many stock trades. But again, one of the things is if you are a stock trader, I'm in chat, ghost chat for almost the entire day answering questions. And so I'll talk about other trades that you might be doing. We can talk about, do we trade the stock? Do you want to trade the option? We can talk about, hey, I want to buy a call here or a put, or I want to buy stock. We can talk through some specifics for you if that's your bias. Yeah, but I expect once things kind of calm down a little bit more, that we'll probably do more stock alerts. But right now we're doing vertical spreads, long calls and
Yeah.
puts, and an occasional stock.
So on that front, first of all, I'm much more comfortable with people in options trades because it's very defined risk. And I want to bring up a really specific instance over here because people are talking about, can I do this in an IRA? The answer is absolutely unequivocally yes. Anything that he is doing can be done inside of a retirement account. Now, I know that some people, by the way, I go nuts about this. Some people have issues with their broker. My broker won't let me do this. Okay. You're giving money to your broker. You're paying your broker, okay, to work for you. If they won't do something that you clearly want to do, you better find a better broker, and we will actually do that for you. Now, look, here at TheoTrade, we work with many, many different brokers. Yes, we work with Charles Schwab, and yes, we work with Tasty Trade, but we have friends all throughout the brokerage business, and we will actually help you get approval to do these trades. But you can do any of the trades that Brandon's talking about. You do have to have $2,000 in your account. That's it. That's the limitation over there, $2,000 in the account. That's not our rule, okay? That's not the brokerage firm rule. That's actually an SEC FINRA rule, especially to be able to trade spreads in that brokerage account. You technically could even circumnavigate that by using a cash account, but push that aside. Look, 2 to 3 high probability trade alerts a week. You don't necessarily have to trade stock. That's exactly the point that I wanted to make, though, Brandon, because with stock comes a lot more capital actually tied up, right? So stock, okay, and option trade alerts, but predominantly, Brandon's actually going to trade the options. And you did see throughout the course of some of the examples that Brandon did, he used some single option trades and some spreads. I would have to actually say it's a pretty good mix between the two. I did see there was one that he actually traded for 14 cents. Okay, it was just a single option trade at 14 cents that just exploded on him. Okay, all right. This is obviously based on institutional activity. Okay, and literally looking at the forensics of market footprints, obviously designed for maximum upside with controlled risk. Spreads are clearly going to be the controlled risk. And again, this is not going to be guesswork on your behalf. Yes, there will be discussions about the trade executions, okay, but the big discussions actually happen behind the scenes. Myself, Brandon, Blake, we're all talking about these ghost prints. Okay, this has been incredibly, incredibly viable trade over the last couple of years, and this is an area where, like, people, listen, we are right on the bleeding edge, okay, of what you can see in terms of order flow. This is like a new genre of trade. It's forensics order flow. That's really what it is. So there's no guesswork on your behalf. It's actionable trade ideas. That's what the trade alerts coming out. Those trade alerts are coming out to you. You can execute everything off of your phone. Trade alert actually sends out, we can send it out via text, push notification, okay, and email. It's coming out to all of those mediums at the exact same time. So you don't have to, pull over to the side of the road if you're driving and immediately trade, okay? You don't have to sit in front of your computer all day long. But the trades, okay, that he is sending out can absolutely be executed over any mobile device over there. Again, this is one of the critical areas. Whether you select for 90 days or whether you select for a year, you're going to be receiving anywhere from 2 to 3 trade alerts, okay, per week. And there's going to be times this summer gets a little quiet. Okay. He gets one alert this week. All of a sudden, boom, 3 or 4 next week. Okay. Give him a little slack on that one. All right. Brandon, for your information, have covered cost of tuition ×2 so far. Great job and thanks. That comes from Walter. All right, 2 hour live Ghost Prince master class. So this is Brandon, okay, coming up Tuesday, June 24th. This is right around the corner. And one of the reasons, obviously, we're hosting today's presentation, okay, this is it. When I say this is it, look, the Tuesday, June 24th at 3 p.m. Eastern time. Immediately, people are already in the room like, I'm busy at that time. It's okay, it's recorded. And when it's recorded, we'll archive it almost immediately. Okay, and in the archive, you can even watch it at 1.25 times the speed. Brandon sounds like a chipmunk. Okay, this is a deep dive into really the exact trading system behind the alerts. Okay, there are people that just want alerts. I totally and completely get it. Like literally, there's people that just want alerts. Okay, and then there's people like me that want to see how that sausage is made. This is the class to see how the sausage is made. Okay, why did this 15,000 contracts matter when this other 15,000 contracts did not? Okay, that's important. How to read, okay, some of the forensics behind those moves, okay? And it includes kind of a Q&A session with Brandon, okay? Ask your questions directly. By the way, Brandon is probably right now one of the kings, if you will, of email here at TheoTrade. He's answering dozens and dozens of emails every single day, okay? Keep it coming. Again, it's $1,000 value. It's included today. I put a lot of weight into these classes, okay, because this is part of being Theo approved. It's Theo approved because we're actually giving you what generates that alert signal. We're not just black boxing it and go, oh, it's smoke and mirrors and there's signals coming out. You want to see, okay, why those signals are coming out? Go to that 2 hour class because you're actually going to understand it with a lot more consistency and depth. All right, next, 12-week Ghost Prince Mastermind, okay, kicks off Tuesday, July 1st. I didn't even mention this, okay, earlier, other than there's a 12-week mastermind. Masterminds, okay, here at TheoTrade, okay, are a critical component to your continued education. This one, you got 12 weeks of Brandon. Look, people, okay, the $1,000 alone that's good enough for the mastermind. These masterminds, okay, are extraordinarily time intensive, but you're getting 12 weeks of Brandon, okay, where he's not only explaining a little bit more about Ghost Prince, okay, and specifically the squeeze bar, but in here, he's actually breaking down trades, okay, that are relevant in the here and now. I mean, that's this is it's great kind of discussions because he's like, look, I'm getting into this position. People are like, well, why the MACD? It's rolling over. This is really really bearish. At the exact same time, this is the trading opportunity you're looking for. Okay, could be a bullish trading opportunity. Okay, but that explanation is coming every single week for the next 12 weeks at you. This, okay, is worth the price of admission alone. Is the masterclass is great to actually explain in context, but this is actually taking you through the individual trades on a week-to-week basis for the next 12 weeks. Okay, this is one of the biggest. I guess I'm an area like I'm a proponent of the area of don't just, again, see the alerts, but see how it's actually done, okay? And this is exactly how he's going to do it. So for the next 12 weeks, starting July 1st, he's going to give it to you as cleanly as possible, okay? During this time frame, there'll also be some trade setups. And again, if you can't make it live, it's okay. That will also be recorded, all right? Again, somebody else said it's the link. It's theotrade.com/ghost, right on the bottom over here. All right. By the way, this is the 12-week Ghost Prince Mastermind. This is actual dates set up in here, okay? So from July 1st all the way to September 16th, okay? Again, this is 3 p.m. Eastern time, 3 p.m. Eastern time. That leaves, obviously, 1 hour, okay, of the market to be open. So there will, okay, be some live trade executions in here. So Brandon, bring you into this a little bit. How often do you trade actually during the thing? Do you set up a lot of the trades during? Because I've actually tuned in, talked to you back and forth a little bit, but how often are you actually trading during that last hour?
So my MO is frequently, and we've done it most every week. I'll send out a trade probably a half hour or an hour before the session. And that way we get a chance for people to fill it and we can answer questions in relationship to that. So yeah, we frequently do trades on that Tuesday, but I'll usually send it out just before, and then we'll dig deeper through it. That
Right.
way, hard sometimes to send that alert out if you're not there. Say, hey, get into it, But I'll send it out before that we can talk about it on a deeper level and still have a chance to get filled.
Man, your whole life is planned out till September 16th. Till September. That's seems
I'll see you in September, Don.
all right. I'll see you in September. No, I like it though, because again, 12 weeks. It's pretty intensive though for like a mastermind for 12 weeks. Again, I'm pretty big advocate of obviously of Ghost Prince because this is the stuff that it's order flow. It's near and dear to what I trade. Okay, Ghost Prince chat, exclusive community. When we start talking about the Ghost Prince chat, how active are you in the room? Would you say every single day that you're inside of the Ghost Print room?
Yeah, I'm in and out. So it kind of depends on what you're doing, right? If we have people talking a lot, chatting a lot, I'll probably be there almost the entire day. Otherwise, if there's not a lot of chats coming, I'll kind of just poke my head in and say hi, or if I see some prints. So we have an activity log. So it's a spreadsheet that I'm curating stuff I'm posting throughout the day. And so like energy the other day, I'll say, hey, lots of posts in energy, try to create some discussion around it. But as long as you're there, I'll be checking it all day long.
Yeah. Okay. So that's the point I was trying to get to with this. The chat community is not just you talking to other it's like-minded traders or whatever. You're actually conversing back and forth with Brandon. So Brandon's actually checking the chat room. It's just another way to communicate with him without actually having to email Brandon. You're able to communicate with him directly into the chat room. And a lot of the stuff over there, it's specifics about trades that he's got on, trades that he's thinking about put on. One of the cool things though, Brandon, that I've seen actually in the ghost room. So I just like to call it the ghost room. One of the cool things I've seen in the ghost room is clients are now coming into the ghost room and posting, this could be the possibility of a setup. And I'm like,
right.
Oh, that's kind of cool. Because by the way, look, we cover a lot of stuff. Okay. But there's going to be stuff that you see. And it's important. Like you're probably running the scan just as much as we are. Okay. Some of you are even more. So we'll actually run some forensics on your ideas. Okay. I don't mind saying to clients like, oh no, this is terrible. Okay. But the ghost chat is phenomenal. This is probably one of the most active rooms here at TheoTrade outside the main TheoTrade chat room. This is pretty much our most active room.
And that's the thing is, I mean, and I love the fact, I love when people kind of come in because we're sending out 2 to 3 trade alerts a week. But I mean, my thought process is, hey, let's find 10 good kind of potential opportunities, identify 2 to 3 trading opportunities a day, and then take 2 to 3 a week. Well, some people may want more, and they're talking about it. I mean, I can't remember who it was. It might have been Art, wanted to go over Oklo, made a big trade in Oklo. And so, yeah, I mean, whatever you want to bring to the table, whatever you want to discuss, we're going to do that there, and we're going to help you take more trades if you want.
Yeah. So having joined Ghost Prince for less than a month, I can see you're extremely dedicated to supporting your clients. Your constant update on each trade never stops. You're amazing. It comes from Aaron. Actually, I communicate with Aaron all the time. So Aaron, if you're listening right now, feel free to chat in. We grabbed that quote from you. Although Aaron is overseas, I believe Aaron is in the Kuala Lumpur area. Okay, it's a big city. We can mention what city he's in, but Aaron also I had to ask him one time. He's like emailing me at 3:00 in the morning my time. He's like, no, it's the day. It's the day over here. So if you're in here, Aaron, a little shout out to you.
And he's
again,
someone that wants to learn, right?
That's great.
I mean, and that's the great thing about Ghost Chat, man. If you want to learn, you want to keep asking questions, I'm there to help you.
So I do want to go over this 30-day money-back guarantee. So one of the things that we do here at TheoTrade, okay, is provide a 30-day money-back guarantee. I just simply, state, look, we want people that want to be here. With any product that we have over here, we want people that want to be here. And I understand, instances of life kind of get in the way, but this is actually an interesting one in this case because, okay, I love how it's the Virgin Islands. Because we're offering, okay, either 90 days, okay, or you can actually just jump in and go for the annual right now, which is, literally a phenomenal price. It's half price to go for the annual in here. You still get the 30 days. Okay, you still get the 30-day money back guarantee. And it's imperative to us because, again, we want people that want to be here. By the way, there's no stipulations to our money back guarantee. There's no stipulations. There's no, oh, you have to trade, you have to do this, or little, dance. Look, if you need your money back, just email us. It's that easy. Email us. Okay. you've got everything to gain and absolutely nothing to lose, okay, with a 30-day money back guarantee. And you have to recognize that in that 30 days, you can actually go to the 2-hour class, right? So obviously the 2-hour class is coming up next week. You can actually start, okay, into Brandon's mastermind. Trade with them, okay? Got to make sure stuff is for you. And I get it. Life sometimes gets in the way as well. All right. So let me read off a couple of names over here. Okay. These are individuals. We see your enrollment. It can take me about 5 minutes before I actually see your enrollment. Okay. These are names that have enrolled. You'll receive obviously an email welcome you, obviously to Ghost Prince. Be able to go into that chat room almost immediately. Oleg K from California, Daxis B from Georgia, James B from Indiana. Okay. Scott P from Georgia, Chester P from New Jersey, Jeff G from Colorado. All right, just reading off the first couple of names. There's a few questions coming in here, and I'm going to answer those, okay, in just a moment. And they're actually great questions. How this actually differs from some of the other trading that we do. Let me remind everybody though. Here is exactly what you get with Ghost Prince. Again, 2 to 3 high probability trade alerts per week. All right, and that's either for 90 days or for the full annual. It's whichever actually you choose. All right, Ghost Prince custom scanner. And that scanner, the results, we're constantly posting results in there. Okay, you need not have necessarily Thinkorswim, but if you want to have Thinkorswim or you already have Thinkorswim, fantastic. You can hop on the scanner and go after it. Okay, 2-hour live masterclass, the 12-week mastermind. Okay, learn and trade alongside. And again, to me, some of the best value actually comes out of the mastermind because you've already learned what Ghost Prince is in the 2-hour class. You're just basically doing it in practice over the 12-week mastermind where Brandon's kind of holding your hand. Okay. Again, the eventuality is we hope that each and every one of you are capable of seeing, if you will, and doing, if you will, some of your own forensics. Okay. And that's completely up to you. Some people, though, just want to come here from the trade alerts. That's fine, too. And obviously, the ghost chat. And that's the community where Brandon's in there on a day-to-day basis, answering questions, making sure everybody is comfortable with some of the trades that are coming through, okay? And even providing, if you will, some of the alternative trade ideas out there, which means like, hey, I don't have money to buy the stock. How could I do this with options? And Brandon will give that to you. The retail value, okay, is $6,977. Again, yours today for just $9.95. Okay, and or you are welcome to sign up for the annual there. Okay, and again, the goal over here: surge your account 50%. Okay, in that 90-day challenge. Now, why most traders miss the moves? A lot of traders, they react too late. They trade on news instead of signals. Okay, and they don't know where to look. This is about kind of the forensics. This is about the forensics, okay, of going in and actually looking specifically at why that large option volume is there. By the way, somebody was asking a bit earlier, and I want to address this because I like this question here. The question came in earlier. I do a mastermind, okay, and in my mastermind, okay, I definitely get into some discussion of order flow, but my discussion of order flow, okay, differs dramatically, okay, from what Brandon is doing. What Brandon is doing, okay, is literally forensic work. Okay, there is a tremendous amount of time, and I'm going to just give you guys and back up a little bit where Ghost Prince came from. Okay, the origin of Ghost Prince, and the reason I'm actually mentioning this, and you guys will get a better feel for it. Brandon, okay, for the last 18 months has been giving me a ton of the trades I do for like in-out spreads, and I'm Brandon. I'm like, this is phenomenal. Okay, we need to make it its own unique service though, because with in-out spreads, I can't trade some of the stuff like plug, because when I do a spread, okay, I shoot out a text message. My text message goes to 5,000 people. Okay, we're going to be moving markets out there. So Brandon goes, cool. He's like, we'll actually come up and build an alert service specifically on some of this forensics data. So still actually communicating to Brandon. I'm still taking some of the trades from Brandon. Brandon actually handed me, for those of you that were in it, he handed me the XLE trade. Okay, he handed me the XLE trade. He handed me the SLV trade, okay, that I had a couple of weeks ago, and many, many more. Yeah, I build a lot of my own trades, but I also do still, in any of those like kind of marquee products, still actually listen to Brandon quite a bit. But it differentiates, okay, a massive amount from the type of order flow that I'm looking for. I don't have the time to sit there. Okay, Brandon spends 6-7 hours a day, okay, looking at order flow and really deciphering, okay, what these moves really mean. So it's a big differentiating factor. Okay, look, the next trade could be one you're never going to forget. So stop chasing after the fact. Trade chasing over there, news chasing, and so forth. It's crazy. Start seeing the moves. Okay, before you have to wait for some magical signal out there. You're reading order flow over here. One trade can pay for the entire program. Clearly, that is distinguished by how many contracts you want to trade. If we do one contract out there, that's fine. Be capped in one lot. What's the risk? $100 here, $100 there. Okay. Build your account over time if that's for you. But join Ghost Print's 90-day challenge now. I think you guys will actually love this. I bought 20 puts, okay, and sold for over 100% profit. Thanks, Brandon. That comes from Tom Dickinson. Brandon, thanks for the quick response. I went ahead and rolled the put, okay, to the 30 Delta, profit of over $19,000. That comes from Troy A. Now, a little bit of a Q&A. And again, I want to reiterate one more thing right here, okay? Again, in your payment options, because I've seen a couple of questions in here. The Ghost Prince annual, okay, is $19.95, okay? Or the 90-day challenge is $9.95. Both of those absolutely unequivocally do qualify for a 30-day money-back guarantee. That's imperative. As I said, we want people that want to be here. All right, onward over here. We're going to get to a little bit of Q&A. A couple more names I want to read off over here. I think I got this. Scott P. from Georgia. Chester P. from New Jersey. Jeff G. from Colorado. Edward B. Okay, from Maryland. Vladimir B. from California. Ronald B. from Canada. George B. from South Carolina. Carlton B. from Georgia. Alan L. from Missouri. A lot of last initials there, B. Let's get into it. Brandon, what do you need to get started? A laptop? Do you really need a laptop? Okay. Do you trade at home on a laptop, but do you really need a laptop? I don't use a
I'm
laptop
mostly on
that
my
often.
laptop.
Okay.
In the easy chair,
I have an
reclined
admission.
position.
I have an admission to make. I've been trading off my phone for like the past 3 weeks. Okay. I do some of the trades in the morning over here, but so I'm up in the mountains and my kids are obviously off school right now. So I've been trading off of my phone. So I'm totally hooked. I haven't even bring the iPad. Okay. Yesterday I went to Meteor Crater and actually traded a couple of spreads while on the tour. Okay.
While you're in
Of
the
this
hole.
crater. Yeah, I wasn't. You don't let you in the hole, okay? But I'm up on a landing. I'm like, this is one of the. No, I was actually thinking to myself, this is one of the weirdest places that I've ever traded before. Like it literally is one of the weirdest places I've ever traded. Where have you traded that's weird?
Yeah.
Well, I was on the side, okay, of a rim of a meteor crater, and that's my story, and I'm sticking to it. It was one of the weirdest places I ever traded yesterday.
That's the thing is that
I
I'm
did.
like, you don't have to sit at a computer all day, right? I mean, you can just say, hey, I'm gonna wait a little bit and I'll just kind of see what's popping up. I'm like, you don't need a million trades every day. I mean, we're shooting for 2 to 3 a week, identify maybe 2 to 3 opportunities a day. But the idea is you can spend as much time or as little time as you want. And it doesn't box you in terms of style. I mean, sometimes you see the option activity just churning right off the bat and you get these big, long candles, these big moves throughout the day. I mean, my style is more overnight, going for several days, but there's lots of opportunities to trade this in your own fashion. What we're trying to do at the outset is just find the opportunity.
Yeah, I love somebody said my phone fills me faster, which I 100% agree. And by the way, because I worked with Thinkorswim, that actually makes a lot more sense than you'll ever know. It has to do with the gateway, okay, and how the order fill comes back to you. Your order is actually filling at about the same speed, but you get the message back to you faster on a phone than you would on your desktop. Okay, that's absolute truth over there. The gateway on mobile is substantially faster because there's less messages per second going through the mobile device. So in some instances, you could argue that trading on mobile is better. But look, we have everything you're going to need. Like if you're an absolute novice, okay, in options trading, you've never traded an option before, shoot us an email. Okay, we'll give you access to everything you need to get ramped up. Options 101, 201. Like I don't want anybody to think that you have to be, like an options maven before ever attending this. Okay. In fact, the option strategies that Brandon is going to use are really straightforward. Okay, this stuff is going to be okay, very, very clean, very easy to interpret. The next thing, this is not a membership. Okay, we do not auto renew, okay, or bill you again. So if you do the 90-day trader challenge, I say, I want to do it again. It's $9.95 again. Okay. Or if you just do the annual, okay, that's up to you. You're set for a year. What are you going to do after the year? Okay, we'll notify you. What do you want to do? So we actually strongly believe like this is not like a gym membership here. Okay. Like has anybody ever had a gym membership? You're like, I can't get out. I can't get out. They're like, come to the club. You come to the club, like, you can't get out. You can never get out. That's not what we do. Okay. And I got to tell you, the truth is, why do we do that? Why do we not have like, this auto renew thing? It's because I had a gym membership one time that I could not get out of. Okay. I couldn't literally. Brandon, I moved to the Virgin Islands and the people were like, you have to come in. And I'm like, I'm in the Virgin Islands, man. Like, I'm not flying back so I can get out of a gym membership. They're like, well, we're going to keep billing you. I'm like, so I called my credit card company. I'm like, I lost my credit card. It's the only way I can get out, man. There was no way out. There was no way out. Read up a couple of the names. Victor C. from Singapore, David B. from Wisconsin. Next in the docket over here, you're going to get weekly alerts. So you're going to get about 2 to 3 alerts throughout the course of the week. The one thing I think that Brandon has been accused of, okay, is he gave too many alerts. Like I think you were the only person here officially at TheoTrade, okay, that has been accused of giving too many alerts. Would you like to speak to that, sir?
Well, I told you 2 to 3. We've tried to hold to that for the most part. We do 4 last week.
Okay.
But
You're
sometimes you see
entitled.
more opportunities. We want to step in there, and sometimes I'll send an alert out. So if the market's about to open and it looks like we can close our trade, I'm going to send an alert out a few minutes before open and say, hey, you might think about putting a limit order because you could get filled. And a lot of people have gotten very good fills off the open, just casting that line in the water for a limit. And, but anyway.
Yeah, no, I want to speak to that for a second. Like, listen, no one has to do all the alerts that are coming out. That you don't have to do all the alerts. Like, is one better than the other? Not necessarily. Like, he does his homework, okay, and yeah, he's not putting anything out there that isn't grade A. But at the exact same time, you don't have to do all the alerts. It depends on what products you're trading. You're like, I don't want to trade that piece of crap stock. That was one of the things, man. I'm still. It's not often I do this, Brandon, but you got me on plug. Okay, you had me at plug. Okay, that is one of the few trades where, okay, we talked about it and we were kind of, off on the side. By the way, we have our own little chat room amongst the instructors. I'm like, I ain't trading that piece of crap plug thing. And he's like, there's a huge print on here. Okay. It's the one that got away.
Yeah.
It's the one that got away. I actually, all right. You're going to get access to the private room, Ghost Prints, where all the trades are done. So the alerts are actually sent from the Ghost Prints room. You'll be able to actually access the Ghost Prints room, be able to talk to the entire community. Okay. You can use any broker you want with Ghost Prints. But, some people are going to be like, my broker doesn't let me do anything. Okay. I understand if your broker doesn't let you do anything. Okay. But I will promise this. We will find you a broker that does. Okay. You can do this inside of a retirement account. Okay. So that's number 6 on the list over here. You can use retirement accounts. There's no reason that you shouldn't be able to trade what you want to trade, how you want to trade in your retirement account. IRA, people like it's a SEP, it's a Roth, all of them. Okay. It's all the same thing to us. All right. Next on the docket over here, you can email us anytime, receive a response within 24 hours. Okay. Including trade related questions. All right. So including trade related questions. So there's a lot of places you email. Like if you call up Charles Schwab right now, they're like, hello, Charles Schwab. First of all, you just waited 90 minutes to get on the phone with somebody. They're not even going to answer any questions anymore. Okay. They literally, hire people that can't answer questions. You can ask questions about your account, but you can't ask your trade related questions. Here at TheoTrade, hit us with trade related questions. It's okay. Like real trade related questions. Okay. That is on the dance floor for us. By the way, Larry L from Colorado, just seeing your enrollment come through right now. Brandon will respond to you within 24 hours. By the way, Brandon also, if you want him a little quicker, he's in the chat room, the Ghost Prince chat room throughout the course of the day. So you can always hit him in the Ghost Prince chat room. Look, get results, take action, enroll for Ghost Prince now. There's no risk to you. It's a 30-day money-back guarantee. And again, in the last 75 days, he's had a 52.6% return over here. It's theotrade.com/ghost. All right, Brandon, Okay. Parting words over here because you're going to be kicking off this class. Tuesday next week?
Mm-hmm. Yeah,
Uh,
the thing is, like, you don't have to swallow the elephant all at once, right? We're gonna be sending out alerts. We're gonna be sharing with you how to use the scanner in Thinkorswim. I mean, some people will use bar charts, unusual option activity scanner. So there's lots of opportunities. I'm gonna be sending you in our posting in our log, trade alert. The idea, not trade alerts, but large prints that are going on that I've kind of curated myself. So there's lots of opportunity to just kind of ease your way into it, take trades, but then gain the experience of how to identify prints and then how to trade them. And then again, you have opportunity to chat with me in the group chat or private chat on Ghost Prints chat. So, and then you have the opportunity to email me. So
I
a
love it.
lot of opportunity to connect with me if you want.
All right. On behalf of myself and everybody at TheoTrade, Brandon, I want to thank you for actually joining us today. And ladies and
Sean.
gentlemen, we're going live right now. We're actually bringing on Garrett. We are not stopping here. So again, theotrade.com/ghost. Okay, to get into Ghost Prints right now. With that, we are bringing in, okay, ladies and gentlemen, live from where are you joining us? Are you in Baltimore right now?
Towson, Maryland. Gorgeous Towson,
Uh,
Maryland. Yeah, we're good, man.
yeah, it's Maryland, man. Yeah, it's it's
Great.
it's hard to get excited about.
We got farms, we got foxes, we got plenty of Guinness. We're good, man. We're holding
You got
up.
Guinness, you got
Got,
beer. I'm down for that.
got a whole freaking
Uh,
Irish pub full of it about a mile and a half from here. My family owns it. We can go anytime you want.
oh, you know what? This is brutal, man. I can't drink beer anymore.
Oh,
Can't
well.
drink beer. I
Oh,
know. I
there's everything there. Don't worry about it. It's a
Yeah.
bar. It's not a hey, there's Eric in Northport. Hey, Tim. Yeah, so all right. Well, Pal's going to speak
Well,
in a couple of minutes. Who cares?
tell me actually what has occurred so far with the Fed. So obviously,
Yeah.
by the way, we're switching over here live. I'm going to turn it over to Garrett in a couple of minutes. But Garrett, I
Yep.
figured to stay on with you for a few minutes too, because
Sure.
I just went head to head with Brandon a little bit. Now I'm going to go head to head with you a little bit.
Right.
So the Fed did nothing. Okay.
Correct.
Do a little dance, make a little love. Like this is an impossible position though for like Powell. What do you do? Well, we have tariffs, we have geopolitical risk. Like there's pressure on both sides of the equation over here, whether it's inflationary or am I allowed to say the word deflationary or you're going to freak out? Like, because if I say deflationary, people absolutely freak out a little bit. But to me, it's leaning a little bit more towards inflation, especially with some of the geopolitical risk
Sure.
in the near term. Thoughts on that one? Like, how can the guy do anything right now with the risks that are out there?
Well, again, it's not the Fed that's driving the bus in the first place, right? This is being really driven by short-term T-bills, liquidity in the broader markets by Bessent and Yellen before him. And if you look at the current state, yeah, you said, Fed funds rate, nothing changes. Balance sheet runoff continues, yet they are buying bonds. I don't think that anybody's dumb enough to believe that that's not some form of support. They keep saying that we're going to move to this 2% inflation target. They've been wrong since 2022 about it. And the dot plot expectations now, right, one cut for the rest of the year. They've been wrong about everything since 2022. They were wrong on the dot plot forecast saying it was going to be 1% by the end of the year. They had 4.2 to 4.5. The pace of hikes far exceeded expectations in 2023. 2024, they forecast two cuts, one occurs, and it happens really late. And the median estimates are masking effectively the internal disagreements. There is a lot of disagreements among this panel on the FOMC and all these other things that they can't control, right? They'll tell you that the unemployment rate is low based on the official number, but if you look at the underemployment rate, it's in the 20s. So it's really a difficult situation. And again, I think it's all BS to be very honest with you. I think we're always focusing on the wrong thing, but this is an important day because it does kind of set the tone for the rest of the summer, what expectations will look like and what volume's going to look like in the next 45 to 60 days.
Yeah, the summer, he's getting ready for Jackson Hole, warming up for that meeting over there. By the way, it's nothing like taxpayer dollars to finance your trip to Jackson Hole at least once a year. Anyway, people are pretty harsh regarding Jerome Powell, but again, at this point, stuck between a rock and a hard place. And Scotty B over at the Treasury right now is really, I think, running most of the monetary policy at this point in time. Nevertheless, this could spook markets. And from where I stand here, there's still a really substantial expectation of movement on today's trading session. That's the one thing. And you're welcome to grab the screen and
Yeah.
share your screen over here. But there's
I
still
gotta send a request to you.
Do you? Okay. It won't even let me. Okay. It won't.
Well, while we're briefly mentioning this, you just brought up Jackson Hole.
Yeah.
That I think that's set for the 21st through the 23rd. While that is going on, there's a blockchain symposium conference with SALT. So like that's Scaramucci's group. They're going to be out there at the same time. So, the thing that ultimately I pay attention to is, all right, you're going to have all these movers and shakers out in the Four Seasons in Jackson Hole while all of this is going on. This kind of sets up for one of those policy conversations that we have to be watching. So I think it's going to be very important to watch, announcements around things that the Fed is doing in blockchain or focusing on CBDCs. Nothing surprises me anymore when I see a bunch of hedge fund managers gathering around a bunch of policymakers at the exact same time.
Scaramucci, huh? He's still around. He's still alive.
He's still kicking it, man.
I have not heard that name in a long time.
Yep.
Okay. What rock did he crawl out from under? I have no idea. By the way, as Powell is hitting the main stage, the S&Ps are already reacting here. As I said, and I'll give you this parting thought. You should be able to share right now.
Okay,
I think you are host.
No,
but
sharing is not turned on now.
Really? Okay. Because I don't have it either. Okay. Actually, it says I can share screen, but I don't know.
Need me to leave and come back?
No, it's me. I think I'm probably gonna have to leave. Okay. I'm going to have to leave. Turn it over to you. Yeah, it's really weird. Okay. Yeah, I think you are your host over here, or somebody's not paying attention in the okay. He's coming into the booth. All right. See if co-host is in here. I'm actually gonna make sure that you're good to go. All right. You good?
I'm gonna try again. No, it's not. It's not taken. You want me to leave and come back?
No. Give me a second.
We're doing it live, everybody. Yeah. So looking at this right now, a little bit of a pop above volume weighted average price, which is what I would be showing. What I'm looking for is the market to take a direction in the next 3 to 4 minutes and follow that. And what we could potentially see is a return of the 235 to 237 trade, with institutions potentially selling into the close today, particularly with triple witching coming up on Friday. No market tomorrow. What are we going to do, Don? What are we expected to do? Not work?
The interesting thing is without the market.
Yeah.
So sorry, I'm trying to figure this out on the side over here.
Yeah.
Without the market open tomorrow, it actually implies that the bigger move is coming today. But the other aspect of that is think about the geopolitical risk that's on the table because the markets are closed. And the futures markets will partially open throughout the course of tomorrow, which does lend itself well to those that trade futures. There's going to be some price action. But there's a lot of critical risk that could actually play out in the next 24 hours. Okay. That's even beyond, if you will, Fed. So by all means, we do have some issues again ahead of us in the next just hour or two of trade over here, because this is not going to be easy. So even though we're actually discussing the Fed, I actually think it's some of the geopolitics that are actually moving the marketplace and making it that much more skittish. Because here's another situation where I'm not saying that bad things are going to happen, Garrett. Okay, but I am saying that I'm not sure I want to go home long right now, coming into this. And that's always a difficult one. So, that's always going to be a difficult one out there. Anyway, let's see if I can get a hold of these monkeys. And otherwise I can leave and see if I can give them a call on the back end. Yeah. All right. I'll leave and I'll let you have at it. S&Ps right now, they're all over the place. Let's see what we can do over here. Yeah. Thanks everybody for having me on. I'm going to turn it over to Garrett here for the next hour and 20 minutes or so. Garrett, if you need me, hit me up on the side over here.
Sounds good. Thank you. All right. Sharing is not turned on for this meeting. I still cannot share. So this is quite a predicament, I suppose, unless you want to just stare at my face. We're going to need to figure this out. All right. So I'll just kind of take you guys through what you're just going to stare at me. That's fine. All right. So just take you again through what we just talked about. Fed funds rate held at 4.25 to 4.5%. Balance sheet runoff QT is still ongoing. Fed reiterated its commitment to that 2%. Oh, we did it. I am now the host. Killing it. Awesome. Thank you. All right. So language remains cautious, prepared to adjust if risks emerge, right? Whatever the hell that means. But again, in this geopolitical environment, this becomes the challenge. I have VWAP open. And what I was hoping for, what I'm looking for, is a return to this trade. You could trade my face, Peter. That sounds good. Colgate and Handsome Cream. All right, we're looking for this type of move. We're looking for something to give the market a little bit of confidence and wake it up a little bit. And this was the move that we traded for about 2.5 years, looking for a pop and then institutions to use the last hour as an opportunity to take some profits. But typically, this starts to run around this time as Powell is out on stage having his little chatter at the moment. So this could end up being nothing. But it's a very important time to just take a step back and reassess these markets for what they are, because this is kind of a pivot point for a lot of funds in terms of how they're going to adjust their portfolios heading into later this year. The VIX is not moving, as Professor Bierman's saying right now, which is very important to note. But on top of this, I just want to just explain, like, we have these conversations and they largely don't matter, right? Until they do. But economic activity is expanding, fine. Unemployment rate is low. We know that's BS. Inflation pressures persist despite cooling trend. Don brought up the term deflation. Well, let's keep something in mind. We continue to add a lot of capital to the financial system, and I have VWAP sitting over on the side, as I always do, SPX up, looking for some sort of move down to that second or third deviation band, whatever might happen. We're just not getting anything at the moment. But you got to keep in mind that monetary policy is involved in papering over deflation. Well, what does that mean? Well, keep in mind, back in the 1990s, we had 3 massive deflationary events happening all at the same time. The first was the dot-com, right? Dot-com. If you're going to try to trade this right now, it's the 599 call. The 599 call, and your stop is going to be right back at volume weighted average price. That's the only real clean way to trade it and try to trade it fast, unless you want to trade the SPXL. But Don just said it. I don't know that I want to necessarily be long in this environment. Tim just said housing costs crushing the majority of households. How will those affect work into markets? Well, once again, I don't worry about a lot of economic data. I'm focusing specifically on liquidity in the system that pushes markets higher. I just shot an hour-long version of the wave speech. I did an updated version of it, which, if anybody doesn't know, this is the worldview that I have developed post-COVID that focuses on momentum, liquidity, insider buying, and policy. I will put it in the chat toward the end of this conversation today. So we just put it up on YouTube. So the key thing to keep in mind here is that in the 1990s, we had, where do we see it? I'll put the link in momentarily. We just uploaded it to YouTube. You can watch it at 4:00. So to keep in mind, we had the internet, we had the fall of the Berlin Wall, and we had China joining the global trade. That was 3 massive deflationary events. And at the time, a very important thing happened. Larry Summers, of all people, told the Fed that they should not pursue a zero inflation policy. They wanted to pursue a 2% inflation policy. There was a reason for this. The reason, according to Summers, was that Americans are too stupid to understand deflation and inflation. Deflation creates abundance. Inflation creates higher prices. But keep this in mind. The one more very important thing about what he was arguing was that Americans would not see the real value of deflation because the value of their homes would go down in real time, their biggest asset, and the income that they generated, their salaries could come down. So even though you were getting more for less, the value of the home, the nominal value of the home, and the nominal value of the income would likely come down, and that would upset people. So they started inflation targeting in the 1990s, 2% a year. This was highly academic. Janet Yellen's fingerprints all over it. And then when COVID hit, when 2008 hit, that was a monstrous deflationary event because of all the capital that had been sucked out of the system due to the implosions of derivatives. Every single major financial crisis that we are witnessing is usually a deflationary event because there is a lack of capital in the environment, and that ultimately leads to concerns that there's not enough money to refinance existing debt. Okay. We're screaming. We're starting to move. Okay, so we're hoping we get up here to around 602. If you bought the 555 or 599, again, if you're buying the 599, you take profits at the first deviation, you take second deviation, and then you hold the third just to see what happens. We're specifically looking for this. And what I'm looking for toward the end of the day is for the S&P 500 to run higher, and then I'm going to turn back around and start to actively trade a little bit more insane stuff. That would be the triple bear ETF for the S&P 500. If I can get down here at 515 on this and look for a bit of a sell-off today, it doesn't seem like it's that significant. But there is a nice little lottery ticket that can eventually pop up for us, and that is found on the options chain of the SPXS, which is the leveraged ETF. This Friday, the SPXS $5 call is currently trading at about 26 cents. What I want to do here, and I'm going to show it to you right now, if this sets up for us, what I'm going to be looking to do is buy this call if we get down here. 515. If we hit 515, I'm going to look to try to buy that call for hopefully somewhere around 20 cents, maybe even less than that, because if a sell-off comes into the end of the day and a sell-off persists on Friday, this is a cheap trade and a little bit of a lottery ticket heading into the end of the day. You can also buy the 553 cents, but just a lotto play. Might buy you a beer. You can have a beer without Don. You can't drink it, so buy two for yourself. That's the goal. So that's what I'm kind of looking for, is persistent selling represented in the SPXS because the SPY is moving up. And the fact that those options expire Friday is because the SPXS and the SPXL only have options that expire on third Fridays. It's a lotto play. It's fun money, right? It's the money that I'm going to get from my closed-end funds that I'm going to put down 25 and try to make 40. But I need to see it up here. So that's what I'm looking for. Now, he also mentioned the concept of deflation. The other thing that's important about this, and this was just brought up in the chat, the price of real important things have gone up. Housing, education, food, electricity, housing, food, electricity, basically all materials for anything that you need. Real things, the things that matter, go up in price because they are papering over the technological impact of deflation. We have potentially the biggest deflationary trend in the history of mankind happening right now. That is AI. AI could wipe out so many jobs around the world. And if that is the case, the Federal Reserve and other central banks are going to pump money into the system for the purposes of offsetting that deflation, because there's not going to be enough money in the system to refinance all the existing debt. So this is my argument for why you need to learn to trade, right? Back in the 1700s, if you were a fur trader, you would capture your little muskrat, skin it, and sell it. You would try to buy for $1 and sell for $2. Well, this is the modern version of that. Luckily, we don't have to go outside. In fact, all we're doing is using the technical components that are in front of us to scalp and to take advantage of price action and misalignment. Now the SOXS moving in the other direction. We'll see if this starts to sell off. Fortunately, I missed my window on that. That's okay. So if you were in something, that becomes your stop out point. So stop out. And now we're going to reload and see what else happens. Uncertainty has declined. I don't believe that. Uncertainty has never declined. We've had 4 Sigma events in the last 4 years. That's not really a good statement, but remains elevated, which could mean anything. Thanks, Jerome. Really appreciate your time today. The dot plot and the market expectations. Fed officials now signaling one cut this year. Previous expectations called for 2 cuts. Markets pricing suggests the September 25 cut the most likely. The dot cot highlights the Fed's higher for longer stance. Once again, remember, it was not going to be higher for longer. This is the funny part about this. I have been on air for 3 years, and I remember transitory inflation and higher for longer was supposed to change to how long? Higher for how long? It was supposed to shift. It hasn't shifted. So traders should watch the CPI data coming out, the labor data coming out, because these will be pivot points for large institutional funds. And in the event that they are looking to go risk off, there could be very sharp selling periods that lead to these negative momentum events that ultimately lead us into kind of a cascading environment like we were in 2022. Multiple risk-off events, multiple liquidity events, and a pattern that is very persistent with how markets behave. I go back to the SPXL, the leveraged ETF on the S&P 500, and I just want to remind you, and again, you can see this when we watch. That is a expiration Friday, Shell. What you see here is a representation of leverage in the S&P 500. It's tracking the S&P 500 just 3x, right? Well, I want you to pay very close attention to the ADX here, the MACD here, and the sell-off that started the volume decline here on the MFI. Why does that matter? We are only 2% above our 20-day simple moving average. We're right above this level here on our EMA. That can be a period where we sell off and likely test the 50-day moving average. If we test that 50-day moving average, get out of the way. Something's wrong. Nothing good happens on a macroeconomic environment under the 20 and 50-day moving averages of some of these leveraged ETFs because there's so much leverage in the system. So I just want to point that out. And I want to point out what that pattern looks like when we have these events transpire, because typically these sell-offs may come after an inflation event, CPI, the Fed inflation gauge, or a jobs report. We have a jobs report coming up in 2 weeks. What happens in this environment, and you'll see this in the wave speech, you sell off to the point that no one wants to buy anymore. We have no stocks breaking out, and funds can't sell into a place where no one is touching anything. So they stop selling, and then shorts start to cover, and then they sell right back into that weakness. And you can go back and look at this exact pattern over and over again. This is the Nikkei crash last year. That was a 4 Sigma event. This is back in March 2023. This is the Silicon Valley banking crisis. No buying pressure first week in March. Squeeze, drop. This happened with the gilt crisis. Started up here right around the Fed meeting. Squeeze, pop, drop into the gilt crisis. Same exact pattern happened in COVID as well. These are the patterns of the big downturns in the financial markets. When we had COVID, a drop to the point that no one was buying, a little bit of a squeeze, and then a complete and total dump. What then happens, obviously, we start to see policy accommodation, we see liquidity expand, we see insiders start to buy, and then it's risk back on, and everybody jumps back into the pool wondering what the hell just happened, right? Did not know how to duplicate that on TOS. Yes, this is doable on TOS. It is a little bit more of a challenge to hook that up, but once again, we have the instructions in there. Does the SPXL settle like the SYP, or do you need to close it? I would recommend closing your positions. Nonetheless, this also has options that expire on third Friday as well. Okay, so digging further into this, these are your expectations for December. I want to point this out because I guarantee you it looks nothing like this in about a month. This is the expectation that we're most likely going to end up in that 3.75 to 4% range. This is what the market is saying from CME FedWatch. The Fed's only saying one more cut. How big will it be? 50 basis points, 25 basis points. The market even has bets down here of a full 1% cut. Well, what would drive that? What would drive that is extreme economic weakness, the possibility of escalation in war, concerns about the global economy. These are just bets being made right now in the markets. It doesn't necessarily reflect reality. And this is the core point. How wrong has the Fed dot plot been since 2022? It's not even fair how wrong it has been. Ritzold's blog did a whole analysis of this back in 2023 and analyzed it from the post QE2 world. They were 37% accurate on the Fed funds rate, 29% accurate on inflation forecasts, 24% accurate on unemployment, and only 17% on GDP. So the conclusion here is there's extreme variance and very little predictability in any of this. In 2022, they forecasted a 1% by year end. Actual rate was 4.25 to 4.5%. At the time, I said we needed to be at 6. We should have been at 6. We could have drowned this in the bathtub and everything would have been fine. The problem is they did not want to create a recession right in the heart of 2022. So instead, Yellen began the process of selling T-bills upfront to refinance existing debt, did not want to suck liquidity out of the system for a long duration yield. And instead, the focus on T-bills has been really amplifying the markets since the gilt crisis in October of 2022, a major financial crisis that was very similar to what we had here in the U.S. during the Silicon Valley banking crisis. Effectively, interest rates rose in England as a result. The pension bill, the pension bonds that they, the government bonds that the pension funds had were losing money. They needed to sell to raise cash. That created a doom loop on interest rates, creating another reinforcing loop on the bond yields, creating another reinforcement on lower value of those bonds. And the Bank of England needed to step in despite the inflation that was happening at the time and provide capital to the system. At the same time, the U.S. Federal Reserve started to engage in a pivot on its mortgage-backed securities. And then on the other side of that, the Treasury began to do its manipulation at the front end of the yield curve without calling it Japanese-style yield curve control. In 2023, the pace of hikes exceeded Fed expectations. We moved above 5%, obviously. In 2024, they forecasted 2 cuts. Markets had once at one point forecasted 5. We only got 1, and it came late last year. So the median estimates really show the disconnect between all of these elements in the market. I now want to keep your eye here on if we start to drop on the S&P 500 SPX. This is what we're looking for. We are looking specifically for a move, some sort of move down toward the bottom of the 3rd standard deviation. I am moving this range right here. These are the 1st and 2nd standard deviations together. This is now the 3rd deviation, and this is the 4th. I want to get down here. If we get down here, that is going to be where I'm going to purchase an in-the-money call on the SPY and look to the upside. Look for a reversion to the upside toward the end of the day. Right now, we are choppy, very range-bound in between the 1st standard deviation of price. So I'm not focusing too much right now on trying to get active on this. I'm just hoping that the market can and will bring this to me. That said, why does the dot plot miss? Well, that's pretty easy. Inflation, oil, tariffs, things out of their control. They don't control what goes on with Ukraine and Russia. They don't control what's happening with Israel. They can only look into their fishbowl and tell you what they see. It is in a static environment. And that makes it very difficult because so many people put so much emphasis on what Powell says, but it points to the bigger problem, right? That at the end of the day, a bunch of nerds sitting around in Washington, D.C. thinking that they can control the economy through centralized planning and one value of currency. It doesn't work. But we got to have a central bank. Can't have anything else. And even then, what are the alternatives? Well, every state has its own bank, and we go back to what happened in the late 1900s. I don't think anybody wants that either. So until someone comes up with a better idea, please let me know. I'm looking for it. I'd love to write a book about it. Median masks disagreement. Again, wide range of views come within the FOMC. There are model limitations. Look, their models suck. No doubt about it. They're never right. This is why I don't like models. This is why I prefer instead focusing on equations. And when I talk about equations, what I mean is the equations linked to liquidity, the equations linked to momentum, and the equations linked to deviations in insider buying. Those become the tools of success, not economic models that are broken. These things tend to lag behind. They are reactive. They are not predictive, and liquidity is being driven now. So Don is in the chat right now. Sell one vertical GE 20 for Friday. Wow. 237.5, 235, put 1.7 LMT. Okay, cool. So again, I'm hoping, there we go. Keep going. More sales, more sales, more sales. Cool. And then we're looking for, keep going, getting to that fourth. Get me down to 596. It's coming. Let's see here. Oh, yeah. This is good. Let's see. SPY options chain. Keep going. Sell. Sell Mortimer. Sell Mortimer. 597, still at 3 for the day. Oof. Don was right. This is still predicting some pretty, oh no, that was a 235. Forgive me. Still predicting, though, some pretty strong moves into the end of the day. Let's see real quick. Let me pull this up. See, look at that. Just hovering right there, right at the third band. Right at the third band. Does not want to go further. That's just the SPY. Or the SPX, forgive me. So I need to pull this up because I'm going to start. God, keep going. Get me to 596. All right, let's see. Damn, I wish I would have bought that damn SOXS portfolio. Let's see. SPY. All right. Buy. Let's see. Options. There we go. What a silly little market. The 18th. That's where we are right now. Come on, man. Schwab. And this is Fidelity. Fidelity is the worst today. 597 at $1.07. All right, I'm gonna stalk that for a minute. All right, let's see what do we got going on in the chat. Let's see what anybody's going. Still haven't filled at 172. Nobody wants to be long. That's why I want to be long. I really want to see this down here. I really want to get down to like 390. I want to see a 596. Let me pull up TradingView real quick. Let's go here real quick. Go to the 1 minute. Man, bang. Look at that. 3, ugly. Nothing good. Nothing working. 597. The 598 is currently at 89. 597 currently at 135. That's kind of where I want to be, but I could feel this is going to probably continue to tick down. There you go. Now, let's see here. I got the 5. Yeah, this thing's hugging the second. This is hugging the third deviation line now. So I'm not going in anywhere yet. If I do go back, this may be the entrance point right back at the second deviation line. I would love to see this continue to go. Give me another 9. It's just, you can see it. It does not want to stay down there very long. It does not want to stay down there. So if volume weighted average price starts to arc down, this deviation line will follow with it, and we will continue a sell-off. And now I'm just stalking and waiting for an opportunity to step back in. It's just not here yet. It is just hugging. 3 o'clock. And now institutions are going to start to come back in soon, which is clean. Words is in I'm going to need just bought at. So let's see. 597 for today. I don't believe that this is possible that this would be at 137 right now. How's that even possible? What are people doing? You get away from all these other dates. Yeah, we're just hugging this line. 37. Where are we? 98, 97, 597, 117. Not yet. Yep. Now. Okay. I'll limit. See if I can limit in on this at one. I said, wow, it already jumped from 117 to 131. This is tricky. All right. House money. All right. Just bought a put spread, gone out, now bought a 597 call. All right. If you step back in, will it only be an intraday day trade? Yes. No, I'm expiring today. What contract? Where am I right now? Oh, yeah, that's right. Okay. So, cool. 127. All right. So we're looking for a little bit of a pop now. There we go. Wake up. Wake up. 3 minutes. Wake up. There we go. Keep going. Run. So who? Greeny turned around and bought a 597 call. So 3 legs. First leg out here. Second leg out, second deviation. Or first deviation. Last one, house money. Institutions coming in, and again, algos like to cover down here. I would love to see, just get me to here. Take a little bit of a scalp off this. Where are we? 597. I just switch over to Schwab. We're at 152 now. So 117, 125, 151. Come on, run. Run. Prove it right. All right. Let me I'm going to leave that chart open for you because I do want to say a couple more things, and we're just going to manage this as it goes. Stops right back at the entry. Core thing on the Fed. Don't treat the dot plot as directional. Treat it as directional. Don't treat it as a gospel. Focus on technicals to tell you the real story on the markets. Focus on volume weighted average price on days like today. We're seeing that happen right now. Look at the Fed's actions, not Powell's language. Watch inflation, watch labor, watch geopolitical events more closely. Manage risk positions and avoid overreacting to median projections. And what we're seeing right now is honestly the opposite of what I had anticipated. I was expecting this. Well, now what we're seeing is algos coming in, buying off the bottom there. And now all of a sudden this 597 call that we people were just talking about, that 597 call has just moved up to 180. And now let's go all the way to VWAP. 597 call. Let's just go all the way to VWAP. All right, so what I'm going to do at this point is we switch out. We move to the 1, we move to the 2, we move to the 3. Now we're down here. We're here. That's exit point 1. Take the first off. Second point right here. Look to exit there. Third point, let it run. If you have 3, as I've been recommending, I don't know if I did a very good job explaining that today. I apologize. We're going to have these events all year. But what we're looking to do here is take profits at here, let the next one run. This is your stop, though, back here. So if we turn around and start to sell off again, take your profits at this deviation band and just be happy you got it for the rest of the day. 598 call has moved pretty wow. I don't like to speculate on out of the money in these environments, but this is one of those days where it might have been worthwhile. That SOXS call right now is probably going to get beaten up a little bit because, again, it looks like we're trying to move a little bit higher into the end of the day, see if we get a little bit of a buying pattern. 597 has moved to 175, so 120 on 175, 50 on 125. Not bad, 40%. But I'd like to see this continue to run. Got to be quick. Kind of strange. All right. Now, I hope I didn't close that room. All right. Thanks, Garrett. We are in the money. Thanks for doing the trade live. Cool. Yeah. Let's see. Exit. Let's see. Exit. I got to be, I want to make sure I walk out of this winning, not suddenly waking up and going, oh, well, that was at 125 and now it's at 1. So set a stop. And then that's usually what happens, right? You set a stop and then it hits that stop and then it'll run to like $4. All right. So let's see here. Yeah, it's 150 right now. Cut that. Okay. Cutting everything now. 2 and that push back here became stop 1. That's 1, so that leaves 1 contract, and that's going to be cut momentarily back at exit. So exit's at 160. Now what you're actually looking for is this to do again, recharge it. I'm take whatever gains there are there off of this. Very clean. All right. SPX has no volume for TOS. Use SPY, but again, the key thing about volume weighted average price, VWAP on TradingView is going to be able to provide you with analysis of this because of futures, because of the SPY, because of options linked to it. So yeah, it is a little bit of a paradox, but as I've continued to note, the TradingView style of this has frequently shown us that every time we get down into the fourth deviation of their measurement of volume weighted average price of the SPX, that has become a reversion point. How would you trade Circle? Okay. Is this new? Is this new? It's new. Wow. Is this an IPO today? I actually didn't even know this was a thing, so I apologize. I just can't know everything. I wish I could know everything, but I don't. What a hell of a move today. I want you to pay very close attention to certain IPOs. I'm really more focused on the IPOs and like the core weaves, and eventually Crusoe is going to go public. When Crusoe goes public, back up the truck. That's going to be our very exciting day. Roman just posted the exit for the trade at 172. Who filled at that price? I have a limit order at 165, and I haven't filled. All right. So let's recharge here. I would like this to come back down. And again, you just sit and stare at lines and hang out in a room and chat and kind of go from there. Same thing with the QQQ. You can do that as well. QQQ sold off. It's this down here. Same thing. You're just looking for these deviation moves, and you're going to probably get 1 or 2 every now and then. I mean, you want to watch for the third deviation band in the Qs. Russell, same thing. Same thing with the SPY. I like the SPX because, again, it's that fourth deviation line moving into the fifth deviation that really, really gets my attention. Love to see this flush out. Love to see some overreaction. Love to see more selling. And look for more opportunities like that. And if you get into an environment where you miss something, just use certain levels as they come. Cool. So, I might be out of this now, but this is the market, right? It can be frustrating because you take gains and then you say to yourself, well, damn, I wish I would have stayed here. And if it runs up here, and that's going to happen, quite a bit sometimes, but you don't want to be back here. because as I've noted, the purpose of the market is to sell. So selling happens down here, you get a little bit of strength. And even though it's not a significant move, right? It's not a big move in any capacity when you're talking 12 points on the S&P 500, but with zero date in a one directional trade, it can be pretty significant. It can move quick. You can move from $1.12, $1.15 all the way up to 180 in just 2.5 minutes. And now it's like, okay, well, do I let it run? No, don't let it run. Just take gains. That's the purpose of this, because you don't know what's coming in the next 6 minutes. And I would not be shocked. I'll be very candid that something happens in the next 15, 20 minutes that takes us back to 6,000. And I throw my hands up and I say, well, wish I would have stayed in that 597. But at the same time, you don't know. You just don't know. That's just the nature of this. Sometimes when I'm looking for, I've seen days where the in the money call will be at 2. It'll scream to 6, the price of that call. And then on other days, it'll be at 2, and then it'll just trade like this the whole way. And now I'm just watching the decay in the last hour, and I feel stupid for sitting and staring at the screen the way that I did. This takes a lot of patience. It takes a lot of discipline. But when it works, it works. And, in the worst case scenario, you play blackjack on the left side of your screen. Don't you just get market orders trading VWAP? I'm simply buying calls around volume weighted average price and trading it based on the moves. You do. It happens every day. But as I said, if you want a higher probability, Lee, and this is what I'm trying to note, you want to make sure that you have the SPX open, because you want to see it move down into that deviation band. You want to see these moves down here. This is the 4th and the 5th deviation. You can get this. That last Tuesday was a perfect example of this. The in the money call at this 599 finished the day. I think it went from about $1.80 to like 640 just on that move. So yeah, you do have to be on the spot. You got to be willing to take risk. But as I said, if you do it down here, you can always open a pack of cards. I could do that. If you do it down here, you have a much lower, probability of losing than what you're going to be up here, because you're looking for the algos to step in. Up here, you could trade just around VWAP, and you could see, a big move higher. We saw that happen here. But again, I just say trade down here, go one directionally, never try to short up here in these bands. Strength can always create more strength. I just want to stay right here, buy in the money, have a 10 to 15, 20% downside. But then obviously some of these moves can be asymmetric. I get in according to my set rules, scalp out a little profit, and that's it. Cool. Glad you guys did all right on this. This is one of those things there it goes, right? Boom. Yeah. So I'm out, but again, watch it go to VWAP. That's the whole premise of this. It acts like a magnet. It acts like a magnet. And we're looking for that reversion back to where we were. That's the premise. That's a nice little pop there. But, and again, you're going to chop around and take some risk along the way. I think I'm out. Let me make sure. Yeah, I'm out. Yeah. Okay. Well, I bought that'll pay today. I'll be all right with that. SPY. So again, you watch the SPX, you look for the move down here, and then you flip over to SPY, and wherever you are, that's where you keep your line. You stay with that in the money call, or right around that in the money call, 597 in that case, up to 598. And there's going to be quick and a lot of decay at the end of the day. This is why I always look for it on days where nothing is going on, right? Where all of a sudden the market drops out of the sky. And as I said yesterday, and I said it again today, your first reaction to a move like this should not be, I'm going to go to Twitter. It should not be, guys in the chat, Theo traders, what's happening? That should not be your first move. Your first move, if you see something down here, your first move should be, what's the current in the money call for the SPY 0 date option today? And then hang out here because you're going to miss it. I mean, this was 3.5 minutes. 3.5 minutes. So get in the mode of just instantly saying, well, wait a minute. Like, don't worry about if something's blowing up. Don't worry if there's a war on television. Don't worry who's speaking. Don't worry what the job report is. Don't shed your intellectual curiosity on what the actual thing is and focus on price. Focus on what's in front of you and look to try to trade it. And then go out and read what's on Twitter. Easiest thing to do. $34. Hey, you got $34. $34 you didn't have, bucks. Cool. I'm glad it's working, Secret Agent Charlie. I will do that. Yeah. So Leon, this is a really good question. That's a good question. I tend to only do it. I watch for it at between 10 o'clock and 10:30. Right. So I've always been saying I always try to do it on days that, like, the Fed day, but because there can be these kind of gross overreactions. In fact, I usually anticipate that the market moves higher when Powell speaks, but I look for it from about 10 o'clock to 10:30 each day, particularly on days where we're selling off to start the day. Sometimes this reverts in the first 7 minutes of the opening. I don't like to touch the market before 10. I don't like to trade those 30 minutes. Some people live for it. I know Don likes to trade that first 30 minutes. It's not for me. I like to get a lot of that institutional and reaction selling out of the way. And if we do sell off, we have seen some pretty sharp moves from the opening bell where all of a sudden we start the day well down. This happened. That was 12:30. I'm trying to find a very specific day recently. It might have been this. Friday. No, I gotta go back. You're looking for a check mark in the morning, and you want to pay very close attention. 10 o'clock to 10:30. And if it's not there, just get out of the way. It's not that big of a deal. But sometimes it comes and sometimes it doesn't. The nice thing about this, though, I will tell you, if you are looking at Friday, does anyone know why the VWAP study in TOS doesn't display SPX? Or because there's no volume in that. There's no volume for SPX. SPX doesn't have volume. Again, all of this in TradingView is based on the data set of options, futures, and some other things. So this is why, like, I think you can do this for free on TradingView. I don't think it costs anything. And again, this is one of those things where it's not supposed to make a lot of sense, but it's just one of those things that works. So if it's not broken, don't fix it. Again, there's a lot of these phenomena out there in various data sets that exist that I consistently say, like, I keep saying to people, hey, take a look at this because it's not supposed to make a whole hell of a lot of sense, but it really does at the end of the day when you analyze it. And this goes back to a lot of the academic work that I did at Indiana. When this line, this is the S&P 500 insider buying to selling ratio. It's the 5-day moving average of dollars buying, purchasing to selling of executives. So remember, executives are always selling their stock. They're compensated in stock. But when they go out and they buy it with their own money, why are they doing that? Well, they're buying it because they think that the market has likely bottomed out on the collective, on the aggregate. So these very strong spikes that we see are insiders calling the bottom, and typically it aligns with the policy shift. Again, that'll be in the video, the wave speech that I'll put out at the end of this conversation. But right here, right, that spike that we saw on April 9th, 10th, 11th, that was insiders pivoting with the insider buying of the change in policy. So as I note, what was I trading? I traded the SPY, right? Yeah. Well, keep in mind this is a tough one. Like right now, the SPX is at 590, 589.90, and the SPY is at 598.40, right? 5,990.57, but the SPY, trying to keep up, but it's always going to be a tick behind. It's usually like if you were to just add a decimal over here, it would have been 7 less. So I trade the SPY. So what I'm doing, okay, so let me reiterate this for you, AG, right? I'm keeping the SPX open simply to monitor it. Now I'm pissed because that my SPY position just took off. What I'm doing, I'm keeping the SPX open. The SPX is simply a gauge, right? And I'm looking for the SPX to come down into that band. And then when it hits there, I switch over to SPY and trade whatever SPY is in the money or within that range. But Slick Cobra's got a pretty good metric of it. You're right. And now, yeah. So now what's happening, that 597, 593, 597, 597 that we talked about. And again, you have to take gains because you don't know which way it's going. But, here we are. And the 597 has now pushed to $2. Right. Of course. Of course it has. Right. 198. 198. You're just looking to buy in the money here. Don't be shocked if we're back at VWAP soon. And this is probably going to end the day probably somewhere around I bet 250, 260, even if we get a crazy last half hour. So I just wanted to show you the power of this. I think it's one of those things you can easily do it yourself. It is, it's not a very high risk trade because again, you're staying in the money. So, you're looking for that reversion. You're trying to scalp some gains along the way, and you're not speculating out here. You're not going up to the 600. You're not going to the 602. But you could, if you want to, you might want to take that shot because sometimes what you ultimately come to find is that the 600 was probably down around 10 cents not too long ago. I want to look and see what the chart says. I'll pull up that was right at 3:00 too. So SPY options chain. Take a quick look here. Where's bar chart? I love that Yahoo's data set is a half an hour late. What did they do? What are they doing? It's funny. And another interesting part of this, the 597 at 442 right here was at $4. $4. Then it craters down to where we were, that 3:00 level. And now it's peeling back toward that 6,000 level. Pretty wild to see. Slick Cobra. Oh man, all right. Look at that. $1,500. Or maybe that's $15. Maybe it's a couple of boxes of wine. Can you scan for stocks that hit the third or fourth standard deviations? You can, yes. It is it's a little bit of a pain, but yes, it can be set up. And one of the problems, unfortunately, is you got to keep your screener up to the right. Nice, man. Congrats. That's awesome. So you've got another tool. You got $1,500 to play with, and hopefully you could turn that $1,500 next time into $5, and then just keep doing this over and over and over again, right? That's the goal. Big win. Awesome to see. That's what we're doing here. And as I was talking about this, look, when we get to these extremes with these charts, that's where we buy the dip, no matter what the hell's going on, because the insiders are telling us that the worst is over. We didn't get that. We got something completely different today, but that's the fun of trading. Circle, I got nothing for you. I apologize. And I don't really tap into the IPO space that much. I've really kind of been focusing more just on pure momentum stocks. One of the other things that we do scan for, though, I will note, is we go up here, we look at stocks that are in breakout mode, breakdown mode. So things that are starting to see strength or things that are starting to break down. And we talked about Adobe. we talked about, and again, these stocks are just kind of hovering around their their EMA 20-day moving average. Pulte, PASC. This gives you some ideas of some potential shorts. What I'd like to do in this environment though is effectively do a spread where I'm buying right around the EMA and then I'm selling down, hopefully toward the 50-day. We'll do a little bit of a session on this soon. Momo breakout, same thing. Looking for RSI improving, MFI improving, MACD improving. Intel's on that list today. I was very surprised to see Intel break above its 20-day. And that's something that on Friday, when I get to Friday, what I'm going to do is look for an opportunity to trade exactly what we're talking about here, right? We will take a look at Intel, and with Intel on Friday, because everything has options expiring on Friday, these big names with options around these 20-day moving averages, we'll see if we see some selling and then trade, a call if a stock gets down into those reversion points. If there's sharp sell-off at the beginning of the day and between 10 and 10:30, I'm going to look for a reversal on some of these names, and I'm going to buy, an out-of-the-money kind of lottery ticket back wherever volume-weighted average price is. That's typically the way that I trade these Fridays, because again, it's just about taking shots, looking for opportunities, and you want to stay in very highly liquid stocks that are hovering around these key lines, because as I've said, one of the things that happens around the 20-day EMA and some of these other moving averages is that people set stops directly on that level. They set their stop right at the moving average. Well, the algos are looking for that. They're looking to pick this stuff off. So they're able to accumulate at those and consolidate at those levels, take shares, and then look for a reversion to the upside. Right now, Intel hovering 20-day moving average. Do I use spreads? I use spreads on the 20-day moving average. Yes. So what I'm typically looking for in put spreads, call spreads, when I break that 20-day, that's where I like to do a spread with the 20-day and selling at the 50. Again, it might not be big, but hopefully it's about a 5 to 10% move. And then if we break that 20-day, the 50-day as well, that's where I just typically just take a shot at the upside, long call. Same thing going the other way, break under the 20, particularly names like Tesla, where these are momentum stocks, so there typically is a lot of movement. Breakouts and breakdowns. Carnival Cruise Line is a good example of this. When these stocks break under their 20, they're usually hunting for their 50. So we look for an opportunity to sell here, buy here, sell here. Might be a $3-4 spread, and then take gains if we break under that 50-day moving average. Take the gains right away, not worrying about what the time is, just taking the gain and moving on. When these momentum stocks break under both of their EMAs, that's where I'll go one directional to the downside, particularly if broader market momentum is negative. SPY's dumping. Good. Let's do it again. Let's do it again. Come down here. Come back down to 595. Do it. Do it. Do it. Let's go to SPX. Do it. Do it. Come on, Mortimer. Oh, do it again. I love these. I love moves like this. Q's sold at VWAP. Garrett, would you go again long SPY at the third standard deviation in the last half hour? Yep. Well, third deviation, no. Fourth deviation, yes. Where are we on this, by the way? I think I shifted my numbers, didn't I? Yeah, I did. So let me go 2, 3, 4. Again, I'm looking down here. This is the bottom of the fourth. This is into the fourth deviation. So I'm hoping we get here. What might happen? We might hit the second line and move back up. So a little bit of chop, kind of dull. Just sit it out. SPY dumping. Could you explain SEC Form 4 insider buying to sell ratios? Yeah, this is pretty. There is a equation that I use for insider buying. And what I'm going to show you right now is my equation. This is okay. So there are. You want to watch. You're going to want to watch this video, by the way. But let me explain this to you real quickly. So first off, there is flow of funds. This is liquidity. This is all capital in the system. This is cross-border capital. That's their equation. I just want to point something out and just explain very simply that when it comes to financial equations, these things are replicable. So E equals mc squared by Einstein, you can do, and you can find that it works. You can test gravity using the equations created to, and I can't remember what the hell it is. I know that there's a something squared at some point. God, it's been, how old am I that I can actually remember that even that exists? But that said, equations are replicable. So if that's the case, like it's not some social science or some model. Models break down and have to make assumptions. Algorithms are a set of instructions. They're not set in stone. An equation, though, you can measure and you can tell whether or not liquidity in the system is keeping up with debt. And if there isn't enough liquidity to meet debt, that's where you have a deflationary crisis. The second equation is Henning's log of price analysis of technology stocks. This is a core momentum measurement. This is, you take all tech stocks and you put log of price, relative strength, log of ATR in there, and you determine how many stocks are breaking out and how many stocks are breaking down. When this equation goes negative, it's usually a bad sign for the S&P 500 because of the tech reliance. And then this is mine. This is my aggregated ratio of buying to selling. 5-day moving average. And why does it matter? Because if you take this equation and you take the amount of buying to selling and you put all of it on a bell curve, the things that move into the third standard deviation, where the ratio hits a third standard deviation on a timeline, that is statistically significant. And that typically is where it is time to step in and buy alongside the insiders. So you just asked a very good question, right? Explain to me what this ratio is. In the world of insider buying to selling, there are multiple types of measurements that people will look at. The first is filings. Barron's looks at filings all of the time. So they're looking at the number of filings of buy ratio, buys, filings to the number of filings that are sells. Executives are always selling their stock. A good example of this is Roku. Roku, virtually everyone is paid in their stock, so they're always selling it. So when somebody buys it, it's actually shocking to the market. Like a guy like Jeff Hastings is going to come in and buy a whopping $893 of stock. Like, they never buy any of this. Kathy Wood buys it for some reason, but that's beside the point. I don't watch that. I'm focusing on the aggregate amount of dollars. How many dollars are spent? And this is what's so critical about this. They're always selling. So when they're all taking money out of their own bank accounts, filing an SEC 404 document saying, I'm buying my stock, these come out within 2 days. They're announced to the market. The total aggregate, the total amount of dollars on the 5-day moving average has shown consistently an ability to call the bottom of every crisis going back 20 years. And I wrote pretty much all of my financial papers at Indiana on this, right? This right here is Lehman Brothers. This right here is the beginning of QE in its existence. This is all compared to the same period, right? So we're stretching this out over a long period of time. I'm looking for this aggregated figure and then put it all on a bell curve over 6 months and look at the aggregate levels. And when we get stretched into that third deviation of the amount of money that is being spent by executives compared to how much they are selling, it becomes a contrarian signal to step in and buy. So as we look at this, you see these spikes, right? At the top of the chart. This is a lot of money. This is buying up here. This is aggregate selling down here. These are the bottoms of major crises going back to, when I first started graduate school, we have lived in perpetual crisis for 15 years. 2008 crisis, 2011 crisis. This is the ECB crisis. This is the China crisis in 2016. This is the 2018 repo crash. This is the COVID crash. This is the gilt crisis. This is the 2023 period where Bill Ackman went on stage and said, all right, 5% high enough. Let's pull it. This is the most recent trade crash. This was the Nikkei period, right? It wasn't that significant on the big bell curve, but if you go back and you look at this period of time over the last 2 years, it was significant. It was a significant rise, because compared to where we were on the aggregate number of days, it was out toward the edge of that curve. This was December's buying. This is the April period. So when I came in and I said, guys, they're buying right now, we saw a significant amount of insider buying mixed with a policy shift. And typically that's what happens. We see a policy change that complements insider buying. And when that happens, it is a deep contrarian opportunity to step in and buy over and over and over again. So RTY went long UUP this morning. How does your VWAP showing up for SPX? Mine does not on TOS. We talked a little bit about this momentarily ago, MLJ. There's no volume in the SPX. And the trading view version that I'm talking about here actually creates deviation lines based entirely around options and futures. So it's a very strange little thing that is developed within TradingView. But what I have noticed just through repetition and kind of accidentally is when this gets down into the third deviation, moving into the fourth deviation, that has become the pivot point. Many, many times in a row. Now, last week we had these moves down into the fourth, lot of selling, and this can happen at times, right? You have this structured selling and this kind of period of popping up and down, but for the most part, it has become a kind of bizarre little thing that exists in the ethos that when we get down here into this deviation of this specific line on the SPX, it becomes a bidding opportunity. Fourth deviation into the fifth here. That was last Wednesday. So a good opportunity to go contrarian long for a short period of time. Again, lower risk. Good opportunity. Equals MC squared. Thank you. Thank you. But it's not that. It's not equals. I'm talking about the gravity. I forgot what gravity was. Can you explain to us why you want to break below the third band at the end of the day, where you took the SPY trade in the first touch third band when the price hit 597? Just because I'm looking for this is the broader point here is that when we get down into this environment, this is typically where algos start buying, or we start seeing short covering or hedges being moved. So it just becomes a reactionary trade, and you just keep trading it until it breaks. 207. 207. 207. Where was there a 207 trade? We were talking about 3 o'clock, right? Right here. 207 would have been here. Okay. That's the first deviation. You took a SPY trade in the first touch of the band. Okay. I mean, that makes sense. You can do that, but I prefer, again, to go down to the third level, because, again, that's where the SPX has been reverting. That's where that reversion. And again, this right here, this is the first and second standard deviation. This is the third. This is the fourth. So I'm waiting for it to be down here, get touch into this fourth deviation. This goes back to Stanley Druckenmiller in 2018 pointing this out, saying that there's no real true trend in the market, that the algos keep going down and buying in the third and fourth deviation of price. I have not noticed that because I'm paying for the data. So that could be an issue. Oh, you guys, oh, there it is, 9 meters per second. Right. Oh, man. Thank you. Man, that was a long time ago. I got out of math. They ran out of math classes for me at my sophomore year, and then I didn't take another math class until I was 27. So, yeah, I remember. Would you be able to share the SEC Form 4 link that shows the graph? So it's secform4.com, and it's their buying to selling ratios. And this is a paid site, just so you know. They aggregate data on a daily basis. I actually helped them on something one day because the markets were closed and some things were announced, and it actually created a false spike in their data set. It actually looked like there was more buying than ever on, I think it was Juneteenth last year, because the markets were closed, but the filings were filled, so they had to change that. But this is always an interesting site. I highly recommend it. They look at hedge fund lists. They look at insider buying, 13Ds, 13Fs. We did a whole training session week on it for 13Ds, 13Fs. That should be in the archives. And in addition to that, various ways to trade on insider buying activity. Right now in this environment, not a whole lot going on. Insider buying remains weak, but I am always paying attention when any company or any executive buys more than 10% of their own stock, particularly in the $100 million range. We haven't really seen a lot of that recently, but a good example of this would be Comstock. Last summer, Jerry Jones bought like $100 million of his stock. This was a company that really had a lot of problems, particularly financially, but nonetheless, CRK just absolutely ripped after he bought shares last summer. There's your return, right? He bought it at 10. He bought $100 million in shares at $10, and he's having a good year. Maybe they'll win a game this year. Probably not. All right. How do you plot third and fourth standard deviations? So the way that I do this is, once again, when you come to volume weighted average price, when you get into TradingView, you have 1 minute, right? You're looking at your 1 minute chart. You go to your indicators and you go to VWAP, and that'll pop up. Your first standard deviation of price is going to come in first. So this is first standard deviation. When you go to your settings, the little gear, you're going to add the second and the third bands. But in this case, just get rid of the first band and move your second band to the third and your third band to the fourth. And now you have all of one section, right? This is first and second standard deviations. This is third, and this is fourth. And if you are, really, the way that I trade it, I really should be doing this. Because, again, I'm looking for bottom of the third standard deviation range. So I shouldn't even be paying attention to anything in here. But with that in mind, the reason that I want to keep the other bands up as I go is I want to exit at each deviation. I want to use that as just kind of a mental place to take gains. And again, as you could see, this traced into the fourth yesterday. This was a pretty brutal attempt to try to trade into this. But one thing that I will tell you, if you start to see these sloping moves on these deviation lines, these are funds, dumping, trying not to spur these little tiny moves. Ultimately, what you see is just more selling into that strength. So one of the other things I always say is, pay very close attention to the slope and the rate of change. And there we go. Another little pop there coming off of that period here. We'll see if we get back to 6,000 to finish the day. The other thing to keep in mind, I believe these things expire at 4/15, 0 date. So you still do have some time in the aftermarket, but you're going to be, I believe you have to close all that stuff out on limit. Or, you might even want to, CRK seems like a Gianni trade. Absolutely. Just pure momentum. Yeah, this has been a hell of a move this year in this. Does VWAP settings trade work on the ES? So you can use the ES, no doubt about it. But as I've said, this is a much wider deviation set here. This is the first, second, and third deviation. What I would advise here is to use the SPX. Use the SPX that I talked about, and then when you get down into these ranges, go trade the ES. Go trade the SPY. Trade honestly, you can trade anything to be like anything that's high weight on the S&P 500, you could trade. I mean, let's take a look at like AAPU. So this is an interesting situation heading into, Friday, because all of these leveraged ETFs have all of these different types of options that expire. If you get those types of moves, you might be able to see some stuff on Friday. Might have a $2 move on some of these leveraged ETFs, but $2 move on an option that expires that Friday, that can be pretty significant. It can be very significant. So, I mean, you could trade anything. I just continue to advocate and argue that the SPX is just what you should watch. Just watch the SPX. Yeah, and Leon, I think you're right. So this is just one of those things that I said, I don't know why it works, but it seems to be working. So let's use it and trade it till it breaks. Because there's a lot of volume that is coming in these periods of time. And it seems that a lot of this is programmed to do this. It's programmed to step in and bid at those moments. So $1,500, pretty good. Good job, Cobra. Nice little day. VWAP lines don't show up on Thinkorswim, okay? Because there is no volume on SPX. So once again, in this SPX on TradingView, they are showing it because of options, futures, but it's one thing. Again, I don't necessarily know what the hell is going on, but I do know that it just works. So I'm not going to say anything. I'm just going to say thanks, TradingView. Don't take it away, because this has been a great reversion trade. So instead of using, you can use the SPY, right? You can use the SPY, but I want you to just know that if you keep the TradingView version open, you're going to trade based on what the SPX is doing, not what the SPY is doing, because as we noted, the SPY never gets down there. The SPY gets down here toward the end of the third, but we never tick into that fourth band. But as noted, you can just watch the SPY. Right? Just watch the SPY. And sometimes, certainly, the SPY will get down into those levels. We've seen these types of moves. I'm trying to go back to last Tuesday. Let's go back to 1 month. Last Tuesday. I don't even think that's showing up. That's pretty funny. That doesn't even show. That's wild. All right. Let's go back to the 10th to the 11th. There it is. So the SPY did tick down in there, 11:30, and that was that. I think it was Diamond talking. So the SPY did tick here and then had that move. I want to say that was about a $6 move at the time. So it did tick that third. Good. Again, SPX looking for that to move into the fourth deviation, and then just move right back over and look for exit on the first deviation, exit on the, third deviation, second, and then first, because the 1 and the 2 are combined in the TradingView room. We got 10 minutes. Looks like some people got some money out of today, which is awesome. That's the goal here. And I mean, again, it's not going to work every time. I'm just going to say that, but you just want to know that if you stay in the money and you make a calculated bet, and hopefully, your trade whatever's under $1, right? Just look for the move as it comes, and use that as a stop. So I hope that that's been valuable. Solo Cup, no problem. Happy to be here. I know that some people have asked me some people have said, like, can you just hang out in a room and just do this? Guys, this is like watching paint dry sometimes. I got a lot of other stuff and a lot of other research that I want to do. So, my goal is just to be able to educate you and simplify this for you as much as I possibly can. And if you can do it, you do it. We'll look at, cause I'll be in the room at some point doing some stuff, and, we'll watch this stuff at like 10 o'clock to 10:30. But I mean, it's very hard to trade this all day. I know some people who do it. I know Kenny Glick did it for it does it for years. It's just not, it's a tough one. So, my focus is just to try to find it at one point. Yes, we are aiming to do a mastermind class soon. I don't want to dig too much into it, but primary focus here is to do it around one stock. So instead of using the SPY or using the QQQ, picking literally my favorite stock in the world to trade, pretty much the only stock that I trade actively in a variety of different ways, and then just kind of showcasing the market through that. So we're working on that right now. We can do a lotto day. Again, look for what you're looking for on a Friday, particularly a third Friday with options, is this type of move on a Friday morning. If it comes on that Friday and you have that type of reversal, there's so many ways to skin this. You can use leveraged ETFs. You can use leveraged ETFs options. One of the things that we did back in January of 2022, on June 8th, heading into third Friday, there was a negative momentum event that happened, and we threw a flyer out on a short on the I want to say it was on the SPXL, and it was like a 1,400% gain because the markets bottomed out, and we saw a sell-off into the third Friday. It was the largest hedge fund sell-off in 15 years. So I'm always looking for these big negative momentum, big momentum events that can happen. And resultantly, what we ultimately see is, a huge dump. That week it was about a 10% move on the SPY, which, can lead to exponential gains if you're just taking a targeted shot on some of these leveraged tools that exist. And that's going to be the way that these markets operate. We're going to continue to see a lot more. I hate the word innovation, but that's what it is. You're going to see triple leveraged Apple ETFs. You're going to see more zero date. You're going to see zero date on Apple and Nvidia and all those names soon. They're going to go 3 days a week. Eventually, they're going to be every day of the week. Then at some point, instead of having just options that expire for leveraged ETFs around Nvidia on third Friday, they'll move to Fridays. Then they'll ultimately be happening 2-3 times a week. This is what financialization is. This is what financialization does. And you can hate, I hate it as a, person who wishes that capital could be better allocated to making things in America, but that's not what America really is. So I'm going to take advantage of a trader, and I kind of keep the mindset that you have to know how to trade. You have to know how to take advantage of how this system operates, and you have to be willing to take the gains as they come. So the one thing that I did promise you was the video today. I did this from 10 o'clock to 10:30 today. So I'm going to grab that link for you. Again, I have already done this speech a couple of times. It's called the Wave Speech. It's really just an it's my worldview. It's an analysis of how we perceive the markets and just the idea that things are broken, and you really have to try to reassess the markets in the post 2008 world, and now definitely post COVID. That in this environment we can and we should expect big 4 or 5 sigma events to transpire because of the fragility of the system. And you have to know how to trade it, because these events, particularly the April one that we just happened, what happened last August, while everybody else has their hair on fire, if we've seen this game so many times before, we know if it's, if a sell-off is actually going to have a policy shift, and if insiders are buying, you put all of these pieces of the puzzle together. And, being able to step in on April 8th, even with a small position, knowing that this is the same way that the markets have behaved post-COVID, particularly 4 sigma events. These types of events will make your year, and you might get 2 of them a year. So if you get 2 of them a year, even if you're in cash for the bulk of the year, this is kind of the Spitznagel to Leb model. without having to take the persistent risk of buying shorts all the time. I remember there was a guy who put together a portfolio of stocks, and he would at a 5% hedge on the S&P 500 with the SH, which is an inverse ETF. And I'm sitting here saying to myself, well, 10% of your portfolio is effectively wiped out a year because you have this 5% and then you have the offset. So what are you doing? Well, as I've said, it's a lot easier if you just pay very close attention to when the S&P 500 breaks its moving averages. Because again, every crisis happens when we're under 20-day moving averages, when we're under 50-day moving averages. That's where the real pain is. So if you have knowledge of this and you take targeted moves in very specific situations, you know, these can be these asymmetric returns on the downside. And then, you know, just simply noting you're looking for policy, you're looking for accommodation, you're looking for insiders to buy. Insiders are constantly looking for policy shifts, looking for accommodation. These guys pay a lot of money to booze Allen Hamilton. They spend a lot of money on consulting. There are tons of people who sit around Wall Street, or forgive me, K Street, just having conversations trying to figure out what the Fed was going to be doing today. A lot of people already knew. A lot of people knew what was going to happen today. A lot of people, like, there is nothing shocking anymore. I talked to Brandon about this. This is why you got to watch, you know, go into Ghost Prince, because the money's already moving. The money's already moving. And Brandon and I are seeing the market in very similar ways, but, you know, he's got a different data set, and he's actually been ahead of me on two occasions in the last couple of months. The first was, you know, signaling that there was going to be a big sell-off that goes back to around like February 12th when he was in. And then he went long XLE recently. And I was, you know, paying attention to that because I was focusing on the XLE about a week and a half later when we broke the 50-day moving average on the energy side. So there's a lot of opportunity here. Do you know what the linear regression channel? Yes. Yeah. So what are we? 2 standard deviations wide on either side. The 100 labels what? What is it? The maximum width. So are you asking about the setting, or are you just asking about linear regression channels and the 2 standard deviations and the 95% levels and what normal distribution is? Within TradingView, if you set that width at 50, you're going to be at 1 deviation. Right? So let me dig into the Thinkorswim side on that, because I don't use that platform enough. And you know, I'm happy to dig into it. Oh, does it represent 2 standard deviations from the regression line? It encompasses 95% of the expected price action if price behavior is distributed normally. It doesn't mean 100% or 100 bars. It means the maximum width setting, which is corresponding of plus and minus 2. And it should mirror the statistical expectation that 90 is, I don't think it's exactly 95%, that roughly 95%. What's it, 94.8? Maybe it's not. Yeah, that would fall within those 2 standard deviations. TradingView, I have to look into, but the 100's the width setting. So that's just 100% calculated by default. Okay. Again, I put this in the chat, the wave speech. Again, this is just understanding capital. And, you know, I wrote a piece recently. It should be on Theo's blog that effectively outlines that, you know, just looking at this through the surfer's lens. The last question I wanted to answer, somebody asked, Greeny, you asked what model What specifically are you referring to? I think we're good. All right. Well, look, 674 people. Thanks for sticking around today. Good session. Again, check out the Ghost Prince conversation. Once again, as I said, Brandon well ahead of me on that sell off. That I know how to trade it once it starts, but it's really being able to pick up and see it before it happens. That's where you're able to be first over the wall. I say time and time again, I don't like to be the first person over the wall because I focus heavily on the technical side of this, but he obviously has something special that has allowed him to stay ahead of me, and I'm knee deep in the markets every day. All right, Blake created a standard deviation model for Thinkorswim 1 minute charts. Yes, that is true. He did. So check that out. And congrats to Cobra, $1,500. Give me a box of wine, man. I'll talk to you. All right, everybody, I'm going to wrap it up. I got to go upstairs and have my daughter yell at me about something that I didn't do.